This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Tom Keene off today, tomorrow, and Friday.
3 days in a row.
No idea what he's doing. But we've got Jess Menton
Keene
sitting in for Tom Keene, so that is a worthy replacement for sure. Jess, thanks so much for joining us here. A lot coming up here today. We got kind of mixed opening here. Looking at the futures, a little bit of red, a little bit of green. No big movement there, so we'll stay on top of that as we get closer to the opening here. Paige Henderson, Senior Portfolio Manager at Resilient Global and Equity Team at Allspring Global Investors. She's going to join us here to kick off the show and give us her thoughts on these markets as well. Ethan Devitt, Chief Global Strategist at Moneta. She's going to talk to us about the scope of tariffs, the impact on the markets, and why tariff effects could be transitory for markets here. That's kind of one of the questions of the day. Steve Sosnick, Chief Market Strategist at Interactive Brokers. He's going to be in our studio today, so we'll get his thoughts on these markets. Where is he going? David Gura, host of the Bloomberg's Big Take podcast. He's got an exclusive interview today with Senator Elizabeth Warren, and we're going to check in with David here this morning, get a little preview of what he's going to be chatting with the senator about. So we got lots coming up here this morning on markets, economics, and finance. Again, futures market a little bit mixed here today. Let's kick things off with Lisa Mateo with the Bloomberg Business Flash.
You got it. And we got a mix of red and green on the screen. Investors kind of searching for some direction over President Trump's upcoming tariffs. Right now, NASDAQ futures, little change, down about 17. S&P futures down about 1 point. And Dow futures up about 7 points. We have the 2-year yield, 4.0%, and that is little change. The 10-year yield, 4.33%, and that is up 2 basis points. To commodities, where sources are saying U.S. tariffs on copper imports may come within weeks, and that's months earlier than an official deadline. And that has the metal trading at a record. Right now, it's up about 1%. The Bloomberg Dollar Spot Index is little change. This morning, shares of GameStop, they're up about 12%. The reason why? Well, its board approved a plan to add Bitcoin as a Treasury reserve asset. Then there's some news from Dollar Tree. It's selling its Family Dollar unit to a private equity consortium for $1 billion. Dollar Tree also opened its books before the bell, and it reported a fourth quarter earnings and revenue beat. Its shares are up about 5%. And finally, JBS Foods International, an earnings beat expectations, weakness in its U.S. beef business. That was offset by strong chicken and pork demand. Its U.S. herd actually fell to the lowest in more than 70 years. That is your Bloomberg Business Flash. Paul and Jess.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene.
I know.
How was that in the power chair?
I feel like, you know what? I feel like I have a lot of power right now.
Exactly.
I feel good.
Very good. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast Live, and that's where we go. Paige Henderson joins us, Senior Portfolio Manager at Allspring Global Investments. A big issue I have with Paige, Jess. She is an undergraduate degree and a master's degree from the University of North Carolina.
Oh, I see the rival.
There's a problem there, but I'll try to get past it. Being a Duke person. Hey, Paige, as you kind of came into 2025 here, boy, it's a tough market here versus 23 and 24, where we had, 20% plus returns in the marketplace. How are you kind of positioning your portfolios here for much different world, a world where there's a lot of uncertainty, particularly coming out of Washington?
Yeah, well, from the perspective of the international investor, it's actually been a great year, almost the mirror image of the fourth quarter. So in the fourth quarter last year, the U.S. was very strong and international sold off on the back of the dollar being strong in the fourth quarter, and we're getting a reversal of that this year. I think the big message for investors who are in the U.S. but have some international exposure is, get to wait on your diversification if you're not there. Yes, we've had a big run up this quarter, but we're really back to about where we were relative at the end of September. But where we're seeing opportunity in international is this decoupling. You have the U.S. becoming having a higher uncertainty, which in theory runs your discount rate up and makes your assets worth a little less. But also Europe is starting to kind of take some action on its own. So if you have fiscal stimulus in Europe and Asia at the same time the U.S. is pulling back, which is the whole point of DOGE, you could see a longer period of time where U.S. and international play back and forth, which is the whole point of diversification. So that's all good news for our retail investors.
And Paige, to your point, if you look at the MSCI ACWI ex-US ETF, ACWX is the ticker symbol on that, up about 9% year to date. When you look over at the S&P 500, obviously down close to 2% if you round that lower for the year. So as the first quarter wraps up and it's going to end this coming Monday on the 31st, what's the chance that we could see any sort of mean reversion where you see US stocks bounce back in this second quarter?
I think there's always that opportunity. And what we've really seen, particularly in our markets in EFA and even in our global dividend strategy, is there's been a subtle move to quality. So in the sense of higher dividend stocks have significantly outperformed. Now, some of that is just the way the math works. When the Mag 7 is weak because most of them don't pay much dividend and they're so dominant in the U.S. And that's what worries me as an investor, is that the U.S. the U.S. S&P is really two different markets, Mag 7 and everything else. And so when you're thinking about diversifying, you want to think about that because they do go up and down in big ways. So I think the opportunity is we start to see surprisingly strong earnings coming out of some of these global multinationals that are not in the U.S. And if you think through how tariffs work, if companies don't want to do business with U.S. companies, then they're going to go to their global peers. So, a simple example that people might be, involved in this weekend is in Canada. Maybe they don't want to buy Jack Daniels, but they might want to buy Jameson's as an example. But I think what happens is that the playing board shifts around a little bit, and a lot of the companies that we invest in international are true global competitors. I would also tell people that the valuations, although we went down a lot in the fourth quarter and came back up, the valuation relationship is still pretty stable. And EFA is trading at about a 25% discount to the S&P.
Paige, how much, I guess people are trying to get a sense of, we're seeing, obviously the news coming out of Germany about investing in their defense, their infrastructure, and how that may spread a little bit across Europe, and how that may be, really strong for their economy. Is that a theme that you really take stock in longer term?
Well, I didn't believe that peace was breaking out a couple months ago. I think what really matters, when you think about back to the Reagan administration, when governments spend, even if it, in the long run, it's not good, but think about what happened in the U.S. in 2020 when, the wheels were coming off, but government started spending, that flows into the economy. And that hasn't really happened in Europe for a long time. And that's a differentiator. Now, I think the other piece is that Europe is having to say, well, we can't count on the U.S. to take care of all of our issues, may be pushing them in the direction of making some more economically rational decisions. So I'd also point out that since the bottom in 22, which was a very important year when you moved away from zero interest rate in the U.S. and globally, from the bottom, which I would call September 30th, EFA has performed about in line with the S&P, and even better if you strip out the Mag 7. So, this idea that you don't need to own international because it's going to do better than the U.S. You want to own it because it complements the U.S. and it helps stabilize your portfolio. So I do think that there's more interest in Europe, and Europe is kind of acting more like its own thing rather than, a weak shadow of the U.S.
Yeah, it's certainly been a year for Europe to start off for sure. Paige, thanks so much for joining us. Paige Henderson, Senior Portfolio Manager, Allspring Global Investments. Thinking about a little bit of the European trade, which has been a good trade so far this year. We've always talked about Europe as just, you know, it's a value play vis-a-vis the U.S. It trades at such a discount on a PE basis versus the U.S. because it doesn't have a lot of tech exposure.
Yeah.
But the performance hasn't not necessarily been there, but it has so far this year.
It has. The stock 600 up over 8% year to date.
It's blowing away the S&P.
It is, and the DAX in Germany.
Exactly, exactly. Let's switch over to the rates business, and we'll stay with Europe, talking about European rates, UK rates. We check in with Pooja Kumra. She's head of European rate strategist at TD. Pooja, thanks so much for joining us here. Talk to us about where you think, let's say, the European Central Bank, the Bank of England, where are they going with the interest rate policy there going forward? How should we think about that?
A very tough question. We are all waiting for the April 2 event and get to know what is Trump going to impose on us. When it comes to ECB, inflation has been, coming down very rigorously, and they haven't had to make that much effort as compared to BOE. And to be honest, ECB is pretty close to their inflation cycle, the cutting cycle. So we are looking for ECB to cut rates another 2 times. I think right now the key is that how much of this entire tariff impacts growth versus inflation. We do think that the hit is more on the growth for Europe than inflation side. And that's why we do expect that ECB will be continuously easing to their neutral, which is closer to 2%. Situation is much more harder for BOE. We did get our inflation numbers today. And even though we are seeing progress, but our inflation is extremely sticky. And Trump is less of a risk for UK, just given the fact that UK is more of a service exporter to US than a goods exporter to US. So we are in a better side versus Europe, where Germany and Netherlands and Ireland have been extremely vulnerable. So in UK, it's more about the domestic factors right now. As I mentioned, CPI is sticky, services is sticking at 5%. Today, we do have a budget coming up at 12:30 London time. And that's another time when Chancellor Reeves can give us more into what they're thinking about, whether they're going for austerity again, because she has wiped out her fiscal headroom. We will get updated forecast from the OBR, which will actually show, again, lower growth and higher inflation. So pretty much like a stagflation scenario that was also flagged by Fed in their last meeting. So I would say markets are pretty much looking at BOE's reaction function closer to the Fed's, whereas ECB remains an outlier where growth and inflation are both calling for more cuts.
And Pooja, of course, you're talking about President Donald Trump's planned April 2nd announcement on those reciprocal tariffs and their still unpredictable global fallout. And of course, Trump is weighing imposing copper import tariffs in weeks, potentially not even months here. Obviously, that would impact China a great deal here. When it comes to Europe specifically and its economy, which countries do you think are most vulnerable right now from a rates perspective?
Yeah, no, that's a very good question, because, what we don't know is whether he's just going for the reciprocal tariffs or whether he's going to go for sector-wise. But most vulnerable countries, definitely Germany, because you have automobiles, pharma, everything is, and even the VAT impact, it's basically Germany that gets targeted the most. Next will be Ireland, Netherlands, as well as Italy. But, when it comes to Europe, we think of it as a whole, and I do feel that the action will be taken as one power than country-wise. But what we need to know is, as we said, is it country-specific, which makes the job much more complicated for even Europe and Trump, or whether it's sector-specific. But yes, Germany is the most vulnerable one. And I think that's what explains the big bazooka that Prime Minister Merz actually announced ahead of all these announcements.
So where do we think we see the news coming out of Germany that they're going to step up their spending on infrastructure and defense and so on, and that's given a lift, I think, to kind of how a lot of investors are viewing the European market here. How do we see that in the rates market?
So yes, it's come as this whatever it takes moment for Germany definitely has shaken up the bond yields. We are still 40-50 basis points higher ahead of the announcement. markets do fear that, are we readdressing the long-term neutral rate, the long-term direction of rates for Germany? But I think where we need to be careful is the fact that this entire trillion package that has been announced by Germany, it's not coming on day one. It's been actually spread out over 10, 12 years. And also we need to realize that, yes, it's good to say that we want to spend on infrastructure and defense, but structurally, it's not easy to spend that quickly. And especially for defense, because so far, Germany and as well as Europe for the defense spending have relied on US. But now they want everything to be sourced from Europe. And that won't be easy. And even fiscal multipliers for defense are very low. So I'm not sure how much we can see that impulse from growth coming in from this package in the next 2-3 years. It's more of a medium-term way. But at this stage, European rates have been vulnerable. We have not been able to retrack the sell-off that we have seen since early March. And I think right now markets are questioning how much further the ECB will go. But we just feel that, right now, the thing is all about the tariffs, which is negative for European growth. And that's why we do like being long European rates right now, just because I feel that the repricing has been too aggressive.
Pooja, thank you so much for joining us. We appreciate getting your thoughts there on the European rates business. Pooja Kumra, head of European rates strategist over there at TD Bank, with our news in New York City.
Thank you very much, Paul, Jess, and Lisa. President Donald Trump has signed a sweeping executive action to overhaul elections in the United States. The order demands documented proof of citizenship be added as a requirement for federal voter registration. It also requires that all ballots be received by Election Day throughout the country. Election experts are sounding the alarm. Director of Voting Rights at the Brennan Center, Sean Morales-Doyle.
It would seriously undermine our elections. But really, this is just the latest example of a series of executive actions that this administration has taken to undermine free and fair elections in our country. And I think it's something people should be really, truly concerned about.
President Trump said that more election actions would be taken in the coming weeks. President Trump announced an investigation into how a journalist was added to a text group of top officials discussing plans for military strikes in Yemen, but expressed support for National Security Advisor Michael Waltz. Waltz took full responsibility for the incident, saying, "We made a mistake," and that security experts and legal officials were reviewing the incident to determine how it happened. The incident has sparked concerns over the handling of sensitive information. Republican Congressman Don Bacon of Nebraska spoke to ABC.
Should NSA advisor Mike Waltz resign?
Well, I think he's less at fault here. He accidentally clicked on the reporter's name, and I think most of the discussions were not highly classified until the Secretary of Defense put in the targeting information.
Meanwhile, Democrats are calling it a massive national security breach and are vowing to get the full text exchange. There are now more than 350 cases of measles across the United States. Washington, D.C. is alerting people to their first confirmed infection. The person was aboard an Amtrak regional train and in the concourse of Union Station for several hours while contagious on March 19th. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Jess, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Jess, you have like 17 different jobs here at Bloomberg. What are you working on now? What's the next thing we're going to see? You write stuff that comes out over the weekend.
Actually, yes, but I also have something that went out this morning. 1 second, I will send this your way in our little chat here. So I actually was looking at liquidity overall in the market this morning. So this is for our Taking Stock column that we have on the U.S. equities team. So today was my day. So I was looking at, if you look at the ES1 futures liquidity. So this is Deutsche Bank asset allocation put this together, looking at the 10-day rolling average here. If basically you're looking at S&P 500 futures and kind of going back, and based on that measure, it was looking at liquidity being at the lowest in at least 2 years. And also Citigroup, Stu Kaiser has a separate liquidity index. He has a lot of great stuff. He was looking at the 5-day moving average for that particular index, which is based also on those future volumes for the S&P, also hovering near its lowest level in about 2 years. So not surprisingly, some of this is tied to tariffs, but then also single stock volatility, just given the positioning coming into this this year after that 2-year boom we saw in the first 2 years of the bull market here. So it's interesting. But we saw something similar toward the end of 2018 when we also had a trade war going on. Kind of different economy then. And obviously the Federal Reserve at that point had been hiking rates, but not as aggressive as we would have seen over the last 3 years. But just interesting dynamics here is what we're taking a look at.
So less liquidity. Like all these black pools and darker black pools.
Yeah.
That's the stuff I don't understand.
And also, this is something that's not a new phenomenon. I mean, this has happened since the global financial crisis as there was more regulation on banks and things like that. Yep. So there's other dynamics. This isn't anything new.
All right, very good. We'll stay on top of that liquidity in the marketplace. S&P futures, for Lisa Bromwitz, I'm going with this term, unched. There's really nothing going on out there. We'll stay on top of it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, the tech rebound looks to be running a little bit out of steam, dragged lower by drops in companies like Tesla and also chip stocks. So we have Tesla down more than 1%. NVIDIA is actually off about 1%. And speaking of NVIDIA, the Financial Times reporting that its sales may be affected by China's new energy rules for advanced chips. So let's start with NASDAQ futures. Little change, down about 16 points. S&P futures, they are a little change, down about a point. And Dow futures, they are up 29 points. We go to the 2-year yield, 4.0%. That's little change. And the yield on the 10-year, 4.34%. That's up 2 basis points. To currencies, the pound weakened on an unexpected slowdown in UK inflation. Right now, it's down 0.2% at 129.07 against the dollar. The Bloomberg Dollar Spot Index, little changed. Few companies making news. Well, we'll start with Apple because it's set to unveil new software at its developers event the week of June 9th. It's also expected to announce redesigned iPhone, iPad, and Mac operating systems. Meantime, Apple CEO Tim Cook, while he visited China's artificial intelligence hub and the hometown of DeepSeek and Alibaba. So the company donated $4.1 million to Hangzhou's Zhejiang University. And finally, sources saying Qualcomm, they launched an antitrust push against ARM in the U.S., Europe, and South Korea, accusing its biggest supplier of anti-competitive behavior. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Let's talk a little crypto here. I'm looking at Bitcoin in honor of Tom Keene because he just loves the whole crypto space. Bitcoin up about $300 today, $88,200 on the crypto space. So it's holding at some pretty lofty levels. What I've noticed is institutional buying and institutional embrace of crypto seems to be pretty interesting to me. Aisha Kiani joins us. She's the COO of MNNC Group. She joins us here in our studio. I'm looking in Fidelity is, has assets under management grew by over 40%, $8 billion. BlackRock is into the crypto space. What are some of the latest trends in crypto that you're following now that we presumably have a pro-crypto presidency and administration?
So it all started a couple of years ago, but now given the administration change, right, we have a bit more acceptance to it. And given the regulatory change around it too, or at least on, the commissioner levels, we have started seeing a lot more institutional entering. So we have started seeing more stable coin buying, right? And basically trying to have a bit more stable coin exposure. The other thing is, obviously, we're seeing large Fortune 500 companies buying BTC or stable coins, on their balance sheet. We see almost everyone saying that they're either looking to, build a blockchain or working on a private blockchain solution for their company on how to decentralize their data. So yes, we have Fidelity, we have BlackRock, we have seen a lot of conversations around tokenizing assets. BlackRock is obviously spearheading that effort. But yes, we are seeing a bit more acceptance than we've seen in the past.
Walk us through some of the regulational changes, because that has been a big criticism in recent years about the lack of regulation. So how have things changed?
So over the years, right, we heard large banks saying that, look, we cannot trade this asset because even though it's for us, it's just a ticker, right? We don't know how SEC or CFTC would treat it as, right? What has happened in past month or so is that SEC has literally, let go most of the enforcement tasks that were going after crypto companies. One, all of the SEC charges have been dropped against Coinbase, Immutable, MoonPay, all of the companies that were open. So that has changed this shift. Same thing with CFTC. They've tried to set up, co-working groups just to focusing on digital assets. So even if crypto or blockchain or Bitcoin as a whole doesn't get a special category under digital asset, it'll probably be just treated like another asset under SEC. Just the same investor protection, just one of the stocks that you could trade on the market.
Is that where you think we're going to go? Because I would think that's where the industry would like to be, right?
That's where the industry would like to be, absolutely. But we would see that's where it is headed. Yes.
Okay, so that's good news, right?
Yeah.
So, I mean, is this administration perceived still as pro-crypto, or maybe they just don't care, and that's okay too?
No. Very pro-crypto.
Okay.
Very extremely. We had an industry conference here in New York last week, and not as big as Consensus or, a couple of others. And President Trump had a recorded message. Yeah. Yes, had a recorded.
We carried it.
Yeah. So we carry, exactly. So, and then, World Liberty Financial, the organization under him, they're buying tokens consistently. Yeah.
Okay.
It's interesting too, because if you're just looking at its performance year to date, still lower here, close to about 6%. So, I mean, what's the deal?
It's dead. I mean, honestly speaking, as hyped, I'd be very honest about this. As hyped, we have, as hyped we have basically done with the industry in past 3 to 4 months, right? Ever since the administration changed, we haven't seen new volumes come in. And we haven't seen new liquidity come in. We haven't seen a lot more large institutional just plug in and say, here's the capital, just go trade.
Why do you think that is?
Because I think at the end of the day, in months or so, everyone rather manage their own book than handing to like crypto native funds or plugging into.
I don't know anything about this, and I take great pride in not knowing anything about this. I come from the day of trading blocks of stocks. Has the story kind of faded here for crypto? It feels like the momentum is maybe out of the story. We don't talk about it as much as we used to. I quote it, but when I quote it, like I'm quoting stocks and bonds, I feel like, should I even be quoting Bitcoin? Does it feel like the momentum's fading?
I think we're not as special as we used to.
Okay.
You're right there, but we're not as special as we used to. We were a hedge against inflation. We were, one of that digital asset that you could buy so your grandkids could be proud of it.
But like for the criticism against that being a hedge against inflation, I mean, that clearly didn't work in various instances over the last 3 years during the Fed's hiking cycle to try to tame inflation.
It worked in 2020 and it worked in early 2021. Right now, it's just following the macro, and which it shouldn't have. If it had followed its initial narrative, it was, we're an asset class of its own. Right now, we're just treated like another tech stock.
So what's the next big issue or big milepost for the crypto space? Is there something, piece of news out there that we're waiting for, whether it's a piece of legislation, whether it's a new product offering? What's the next new thing?
I think we are getting everything that we've ever wanted, right? We are getting, a bit more understanding from regulators. We'll probably even have stablecoin legislations come in. I heard that a lot at Milken Symposium a couple of weeks ago. We're going to see, stablecoins being integrated just like, dollar into large banks, or large banks issuing their own stablecoins. I think we're slowly progressing there. My internal skepticism is always, is the tech ready? But I could go on that for days. But I think from the regulatory perspective, from the market's perspective, we have accomplished,
But are the kids at NYU that you talk to are they still crypto this, crypto that, crypto this? I want to go into crypto. I don't want to go to Morgan Stanley and be an investment banker or a trader. I want to get into crypto. Are they still saying that?
50% split, because the other 50% have moved on to AI. So
AI.
Yeah, so
okay.
my course is still very popular. I still have the wait list, everything. I still have kids building under me, writing under me. But now it's like, hey, professor, this is cool, but let's talk about AI also. So.
You had mentioned, we only have about 30 seconds left, but what was the issue with the tech that you were maybe skeptical about?
I think that if you really break it down with Ethereum or Solana, or if you come on chain levels, can we handle that kind of volume, right? As I remember on my first show with Tom, he said, none of this makes sense. So, but I don't know why this asset is trading at 70,000. So please, clarify that.
Yeah, then it went up to a high of 100.
Exactly. And Paul kicked in and Paul said, why don't you teach us? So we're like, why?
Exactly.
So that's the thing. For in order to be at 110 again, is the tech enough?
Okay. Aisha Kiani, COO of MNNC Group, talking to us about crypto, helping us get up to speed on all things crypto. Appreciate you coming in the studio. Again, Bitcoin, for what it's worth, I'll quote it for Tom, because I know he's waiting on it patiently. Up about 0.3% here, $240 at 88,104 Bitcoin. Again, the all-time high was about 107,000.
Yeah, and then also looking at that iShares Bitcoin Trust, because all the rage last year was that spot Bitcoin ETF, so that exchange-traded fund that obviously Gina's team, the ETF guys that work under her,
exactly.
Ethan and everybody always are on top of that.
And Balchunas.
That's right, of course.
All over that as well on the ETF side. S&P futures unchanged, the Dow up 30. The NASDAQ off 10. On the yield space here, we've got the 10-year Treasury up a couple of basis points, 4.34%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes was recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Well, after 3 straight days of gains on Wall Street, futures pretty much treading water. We have NASDAQ futures down about 2 points, Dow futures up about 34 points, and S&P futures up about 1. We have the 2-year yield, 4.0%. That's little changed. And the yield on the 10-year, 4.34%. That's up 2 basis points. To commodities, copper trading at a record. Traders pricing in the possibility of hefty import tariffs. Right now, it is up about 1%. Gold, we'll go there too. COMEX gold at $3,064 an ounce. We go to oil. Brent crude, $73 a barrel. WTI crude, $69 a barrel. The Bloomberg Dollar Spot Index is little changed. More economic data out today. The MBA's mortgage applications index that fell for a second week in a row last week dropped 2%, which is better than the 6.2% fall off the prior week. More data to come. We have a read on durable goods orders in about an hour from now. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Go head over to youtube.com and search Bloomberg Podcast Live. Just looking at the S&P 500, kind of mid-February to mid-March, there was that 10% pullback, technically a correction. But since then, the S&P 500 has rallied about 4% here. So was that a floor? Was that it? I don't know.
That's right. I mean, the S&P's down about 6% off of its high now through yesterday's close.
So, I mean, I don't know. Was that just a temporary correction in an otherwise bullish market? Let's check in with somebody who does this stuff for a living. Ethan Devitt, Senior Family Office Strategist for Moneta Group. Ethan, I'd love to hear how you're talking to your clients today, what you're saying to your clients today about just the overall market in general. Again, we did have that 10% pullback, but it seems to have stabilized a little bit here. What are you telling your clients these days?
Yes, we are bracing our clients, not necessarily for impact. We don't think anything big is coming, but we are bracing them for an extended period of volatility and uncertainty. A few months into the new administration, we are not getting a lot of certainty around the movement around tariffs, around tax cuts, and consumer sentiment is reflecting this. To have a 12-year low in consumer sentiment, which was the recent reading we saw, that's a suggestion that we really don't have a very optimistic consumer. We have some suggestions that there are retail investors buying into U.S. equities while institutional investors are pulling out. But we know that sentiment is key in terms of spending, and we are bracing our clients to just expect that volatility and to get comfortable with their broad-based equity portfolio that is not heavily oriented towards tech, as that kind of broad base should be what sustains them.
Ethan, whenever you're speaking with your clients, what are you suggesting that they buy? What are you suggesting that they sell?
Well, we're certainly looking around taking some profits. And when there is an opportunity for tax loss harvesting, we do encourage that. There have been some nice gains, obviously, but now there will be losses that can be harvested. And we look again we still believe inflation is a factor, even though it is not in the headlines yet. So generally, our portfolios are well hedged against inflation in the sense that they are invested in inflation participating assets such as infrastructure, real estate, and other defensive stocks. So we have that broad base. Nothing of that has changed. And we are encouraging them to rebalance back into non-US equities. They would have got perhaps a little underweight recently as US equities forged ahead. The US exceptionalism narrative led for them to outperform for about 15 years. And now we're looking to rebalance back into that. So not a lot of big swing kind of buys or sells, but simply getting back to basics and re-underwriting what our portfolios should stand for.
Ethan, how about on the fixed income side here? I'm looking at the 2-year Treasury. I'm getting 4%. That seems like a decent living. Do I need to do any more than that in terms of taking credit risk?
It's a great point, and it certainly means, again, this to not have an action bias today into buying anything else, a higher risk. Sitting in cash, sitting in something low risk is actually a very healthy place to be. Now, 4% in real terms after inflation, which we think could be sustained, is not going to be enough to really grow your portfolio, but certainly it's not a bad place to park a slice of those assets. So short-term fixed income, yes, we say it makes sense. And equally building out bond ladders, which are tax advantageous, that also makes quite a bit of sense.
I was looking at the one-day implied moves because for a while, Paul, when you were looking at this, those implied moves were at least 1% every day when the VIX was getting closer to 30. Now that you have that back below that key 20 level, you're not seeing it quite as much, except for the end of the quarter on March 31st. But something I'm curious about, Ethan, is whenever you're thinking about volatility, but then also Fed Chair Jerome Powell's comments last week when he was talking about tariffs and potentially being transitory. We've heard the Fed use the term transitory before in recent years in reference to inflation. How do you view this and its effect on markets?
Yes, a very interesting use of that word, which is quite loaded, as you mentioned. It's not exactly associated with a lot of confidence in the Fed and their prescience in calling the direction of markets and certainly of inflation. I think that was an unfortunate use of the term transitory. There seemed to be a case study used there, which was transitory tariffs during Trump 1.0. There was a use of a graph around the price of washing machines and a suggestion that in the end, after a price spike, they did come back to a deflationary direction, which is due to the lower price of parts, etc. We know that the tariffs this time around, 2.0, are much more sweeping, much more severe, and potentially uncertain, on again, off again. And nor do we believe necessarily that some of those deflationary forces are still in effect. This was pre-COVID, pre-nearshoring, pre some of the dislocation of the supply chains that we've seen since then. So I would say the transitory effect of tariffs, this is unprecedented times in terms of the introduction of tariffs against a backdrop of abundant free trade. So I'm not sure that we can take any kind of comfort from a single case study of Trump 1.0.
Ethan, thank you so much for joining us. Always appreciate getting a few minutes of your time. Ethan Devitt, she's a senior family office strategist at Moneta Group with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. Jess, Lisa, Republican leaders say they are getting close to a deal on extending President Trump's 2017 tax cuts and raising the debt ceiling, something that's been a sticking point with senators. Bloomberg Government's Jack Fitzpatrick has the latest from Washington.
There are some challenges, though. A couple senators, Republican senators, have said they have concerns about the possibility of cuts to Medicaid. And Rand Paul said he would not vote for the tax package if it includes that debt ceiling increase. So the more you add to this, the tougher the whip count gets, and it's still going to be a heavy lift.
Bloomberg Government's Jack Fitzpatrick reports House Speaker Mike Johnson wants to get the bill done by Memorial Day. The U.S. said Russia and Ukraine agreed to a ceasefire in the Black Sea, even as the Kremlin said its involvement would depend on a series of preconditions, including sanctions relief. The U.S. aims to reach a full ceasefire possibly by April 20th. President Trump is downplaying the leaked Signal Group chat among his cabinet concerning U.S. plans for strikes in Yemen. The Atlantic's Jeffrey Goldberg was accidentally included. Trump says no classified information was involved. Secretary of Defense Pete Hegseth, at a press event following a full day of visits to military facilities in Hawaii, says again that, quote, nobody texted war plans.
Nobody's texting war plans. I know exactly what I'm doing, exactly what we're directing, and I'm really proud of what we accomplished, the successful missions that night and going forward.
Meanwhile, President Trump expressed support for National Security Advisor Michael Waltz, who took full responsibility, saying we made a mistake. President Donald Trump has signed a sweeping executive action to overhaul U.S. elections. Tuesday's order demands documentary proof that citizenship be added as a requirement for federal voter registration. It also requires that all ballots be received by Election Day throughout the country. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Jess, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Jess, did you do the BRKT brackets in the Bloomberg?
I did it for the women's. I did not do it in time for the men's because they had already started playing by the time I realized.
Good. Let's focus on the women's because my bracket's much better for the women than it is for the men. I am now ranked in Bloomberg 400 out of 1,381. Michael Barr, are you anywhere there?
Look at you.
Let me guess
Paul.
what your number one pick is.
Yes, you're right. Lisa, do you have a women's bracket?
I do, but it was like eeny meeny. I don't even remember who I picked.
Oh, wow. I just looked at
BRKT, go. So,
my rank is, I think, 2,081. Is that right? Is that correct?
All right, so for the women, there's some players out there. The top scores at Bloomberg. Number 3, Anne-Marie Horton. How about that?
Number 3?
Wow.
Number 3. How about that?
Oh, I should have talked to her before I did mine.
All right, how about this? The top charity scores. This is where you get all the big muckety-mucks on Wall Street.
Okay.
Number 4, one Michael Bloomberg.
Oh.
Not bad. That's a solid effort right there. I've still got, in the 8 games in the Sweet 16, I've still got a team in 6 of them. So I could have a late surge here as we go into the Sweet 16.
Do you see me in there somewhere? I haven't looked yet. Am I in there somewhere?
Oh, I don't know. I'm not gonna. I go for the big names, Michael Barr.
I'm sorry.
Now my men's bracket is just completely screwed. Although I do have Duke winning it all, so maybe I'll have a late surge with Cooper Flag and the Duke Blue Devils. We'll see coming up. We're gonna have more coming up. This is Bloomberg. Good morning.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
All right, Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. Let's get a look at those newspapers with Lisa Mateo. Lisa, what are you looking at?
All right, so remember when Elon Musk put out the request of federal workers to submit those 5 bullet points detailing their week's work,
I'd have a challenge doing that.
Yes. Well, a lot of workers have been doing it, but now they're running into an issue, and the issue is apparently the inbox is full.
Oh.
So their emails are getting bounced back. So now they're putting in this effort, but it's not going through. So what the workers are being told, so for example, you have the Department of Health and Human Services. They're telling employees that, okay, we know what's going on. So they're directing them to send their weekly 5 things emails to a different OPM email address. Even NASA unveiled this app so that workers could send their reports there too. So they're doing all these different things because remember, he had said that workers would be fired if they didn't reply. I mean, the White House kind of, pulled back and said, you know what, let's explain, we'll leave it up to the leadership of each agency to determine, that
Do we
kind
know
of thing.
who's presumably reviewing these emails to say, are these 5 things you're doing, are they good or are they
That's a good
bad? Are they
question.
evaluating what you're doing? Is there anybody, do we know who's reading these
question.
emails?
Well, now they're getting bounced back, so
Okay,
who knows?
so we're not even there yet.
Getting them.
We're not even
But no,
shocked
it's
there.
a good question.
All right, what else we got?
Okay, so we talked about the housing crisis, right? What it's doing now is that it's sparking new alternatives to building homes. So we're talking about builders using everything from 3D printing, assembling homes inside a factory, and then using hemp, to make building blocks for walls. So this is from the Associated Press. They visited this factory where they're pumping out 500 homes in just over 3 years of operation. Each takes about 5 to 7 days to build. Okay, so they're inside this factory. They get everything, the walls, the wiring, the plumbing, the countertops, and then they're shrink wrapped and shipped out.
Wow.
So this is like how they're pumping it out there. Then as far as the 3D printing, they make like these curved walls that are unlike concrete blocks. But the only drawback is that it's pricey, right? 3D printers are expensive. The engineers to work them are expensive. Other skilled employees are expensive. And then this hemp and lime mixture. I did not know this. It's called hempcrete. Okay. And it's this natural insulation. It's mold, fire resistant, acts as this outer wall of insulation. You still need kind of like the woods and the frames, to build the walls. But it basically cuts down because it replaces 3 wall building components with just 1.
All right. I don't understand how we got into this where we don't have enough housing. Like people aren't having children anymore. I mean, the birth rate is way down. Are we knocking down homes such that we don't? All I see when I drive around is these multifamily housing units being built everywhere.
You didn't use 3D printing for the Sweeney compound?
I just don't understand that the fundamental concept why we have a housing shortage.
I guess people just don't want to give it up because you have
if you locked in
the 2%
rates around 2%, tell those boomers
you walk
leave
over to
so I can
Brooklyn
get a
and they're
house.
building all over the
are.
place. You walk into middle America, they're building these multifamily units all over the place.
Yeah. It's expensive.
I don't understand. So that's I'm not buying this. There's not enough homes out there. That's my thing.
He's not buying it.
I'm not buying the whole concept. All right, what else we got?
All right, last one. Meghan Markle's new Netflix cooking show. Not sure if either of you have seen it, but apparently it's gotten, critics are bashing it and saying, what does she know? But what they love is her fashion. It's called With Love Meghan. So apparently she has this fashion selling power that everything she wears, like dresses, shirts, vests, cashmere cardigans, they all go viral and people buy them and the stores are getting sold out. They're going on wait lists.
So you guys are not the demo for this?
I guess not.
I actually haven't seen the show yet, but I saw a promo on Netflix.
It looks beautiful.
Yeah.
It does. And I do like what she wears. I don't know if I would buy it or be able to afford it for that factor.
Yeah.
But I mean, she's also starting like this Shop My page where she can actually make affiliate revenue from these things. So she's kind of turning her own thing.
So this is a cooking show, right?
It's a cooking / like she gardens, she entertains, like it's a lifestyle.
Okay.
There you go.
All right.
A lifestyle show. And apparently it got renewed for a second season.
I'm not down on Meghan Markle like everybody else is. I have no opinion one way or the other, but we'll have to see. All right. Lisa Mateo, newspapers, thank you so much much. We appreciate that. There's a lot of stuff going on out there, Jess. It's not just the markets.
That's right, apparently.
Apparently, there's a lot of news out there, and we need to stay on top of it. Looking at the markets here, again, not a lot of movement here in the futures. Up about 2% on the S&P. Dow's up 47. NASDAQ off 5.5. Here we go. This is Bloomberg. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, Jess Menton sitting in for Tom Keene, Lisa Mateo, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Coming up, Gina Martin Adams. She's up in our Boston bureau. She must have Celtics tickets or some of the Bruins. I don't know. There's some mutual funds up there, as I understand it. So maybe she's probably talking to those folks up there. We're going to talk to Gina Martin Adams, Chief U.S. Equity Strategist for Bloomberg Intelligence. What are we doing with these markets? I'll just ask Gina. She knows. Joy Yang, Head of Index Product Management and Market Vector Indexes, talks to us about trends. Rising uncertainty, but I got the VIX. I don't know. I've got the Tom Keene Memorial VIX at 17.3 here. That seems pretty modest to me, but we'll talk to her about what's happening in the world of volatility in this marketplace and how do you play it. So we got a lot coming up over the next couple of hours. We've got futures that are mixed this morning. Not a lot of direction here at this early hour, but cash trading starts in about 90 minutes. Let's kick everything off. Lisa Mateo and the Bloomberg Business Flash, Lisa.
Yeah, you got that right, Paul. Little movement in futures. Investors kind of searching for some kind of direction over President Trump's upcoming tariffs. So we'll start with S&P futures. Well, they're up just about a point. Dow futures up 41 points. NASDAQ futures down about 13 points. The two-year yield's 4.0%. That's little changed. And the yield on the 10-year, 4.34%. That's up 2 basis points. To commodities, sources saying U.S. tariffs on copper imports, they may come within weeks. And that's months earlier than an official deadline, and that has the metal really trading at a record. It was up as much as 3%, now up about 1%. Shares of GameStop this morning, they're up about 12%. Its board adopts a policy to buy Bitcoin, so that's the reason for that. Right now, it actually just jumped to 15%. Dollar Tree reported fourth quarter earnings and a revenue beat, but the bigger news is that it's selling Family Dollar unit to a private equity consortium for $1 billion. Its shares are up about 3%. And finally, Chewy up 5%. Fourth quarter net sales topped estimates. We are awaiting results from Petco and Paychex as well. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So, Jess, when you're a sell-side research analyst, you go to Boston probably 3 or 4 times a year because that's where the big mutual fund accounts are, Fidelity, Wellington, State Street, all those kinds of things. You got to go up there and meet your clients and talk to them about what's going on in your space and all that kind of stuff. That's the name of the game. And that's where Gina Martin Adams is today, Chief Market Strategist for Bloomberg Intelligence. Gina, what are the conversations you're having with our friends at Fidelity and State Street and all the places up there in Boston? What are you talking to them about these markets?
Yeah, I good question. I think that obviously tariffs are top of mind, but even more so, we're talking about where the opportunities are emerging in international stocks, reflecting the slowdown that we're experiencing in the U.S., as well as acceleration in earnings revision momentum that we're seeing elsewhere. So we've really sort of pivoted to talk a lot more about global stocks this year. For the first year in quite some time, the U.S. is lagging the rest of the world, and that's really driving a lot of the conversation. There still are some conversations certainly about tech and when we find value in U.S. tech, when will we find that bottom in tech, which has really driven the vast majority of the weakness in the U.S. And unfortunately, we're just not seeing that yet. So we've also talked a bit about sector strategy in the U.S., the factor strategy, also how to approach the U.S. market when things are so uncertain and estimate revision is falling, because we just haven't seen that kind of condition in quite some time.
I wanted you to unpack the difference when we're looking at earnings estimate revisions versus where we're seeing annually S&P 500 earnings growth among the sell side consensus. I mean, this year coming in around 9.5%, that's down from close to 13% in the beginning of January. But for 2024, it hasn't really budged. It's still at 14%. So what gives there with the dynamic between those annual outlooks versus earnings revision momentum?
Yeah, so the revisions do reflect just the number of changes as opposed to the aggregate numbers. And we have seen many, many consecutive weeks of negative estimate revision going all the way back to something like October. I think there's one positive week since October. So it's been very persistent downgrades from the analyst community. How that works out numerically is, as you suggested, we're down from about 13% growth expected for 2025 to just under 10. Why that's important, though, I think, is really the key. And it's important because it would imply that 2024 was peak earnings growth for at least the very near term. We had peak earnings growth emerge in 2024 in the U.S. That's somewhat unique relative to the globe, where there still are accelerating pockets of growth, say in Europe or even Canada, also in Latin America, as well as the Middle East and Eastern Europe and Africa. So there are these divergences emerging in rest of world. Even China earnings growth looks to potentially accelerate this year relative to last year. That's an if, but nonetheless, it does appear to be a possibility with accelerated fiscal spending. So that's incredibly important to driving momentum in equities. If you have a decelerating earnings stream, it's really difficult to see accelerating price performance continue. And certainly we're seeing that in the performance in the U.S. equity market, where defensive sectors have largely outperformed cyclicals, not to a T, but generally that's been the case. Tech is one of those spaces where estimate revision has been most negative. So I think that this has caught the U.S. in a bit of a trap where you've got decelerating growth, you've got negative estimate revision. On top of that, you also still have very elevated valuations. And the result is the U.S. stock market is the 20th stock market in the world by ranking so far this year. Really? It's the weakest start that we've had, since 2022. You have never seen the U.S. come back to become an outperformer on an annual basis after a year that has started this week. So it is just likely to be a year where the U.S. lags the rest.
So, Gina, we had, from mid-February to mid-March, that 10% pullback in the market, a technical correction, I guess, here. But we've rallied, 4.5% off of that bottom. When you talk to your clients up there in Boston, how do they view that 10% pullback? Just kind of a healthy pullback in an otherwise okay market, or something else?
This pullback is a little bit different than the two pullbacks we had in 2023 and 2024. And I think that the consensus, the buy side anyways, is sort of coming around to that reality, given the deterioration that we saw in momentum, which was a much more significant deterioration than in the 10% corrections we had in 2023 and 2024, given the earnings affiliation with the correction. Remember, in 2023 and 2024, we had those 10% corrections, but we did not see earnings forecasts downgraded in affiliation with those corrections. So there's a fundamental undertone to this one as opposed to just a technical correction. And that has created a much greater degree of uncertainty. Not to mention, even though stocks have bounced marginally since the lows, we have no more clarity on the economic outlook that has emerged. We have no more certainty with respect to where policymakers are headed. And I think that has created a very different climate for investing in the U.S. And we realize that we probably are past peak earnings growth for now. We need some sort of catalyst to create a recovery in earnings estimate revision, or at least a recovery in earnings momentum into the second half of 2025. One of the most interesting things about this experience so far this year is analysts are taking down estimates, but they're only taking down estimates for the first couple of quarters of this year because the uncertainty is so vast. They're just not sure where earnings are going to go into the second half of this year. They're just very much concentrating short term, trying to get a beat on where growth is going to go in the very, very short run, because we have no clarity on the longer term outlook. And I think that has created this degree of uncertainty with respect to U.S. investment that is very uncomfortable for investors. That said, to the degree that you're more of a global investor, there are plenty of opportunities that have emerged this year. So that's why the conversation conversation has been driven toward the globe is Europe's going to spend a lot more. We're going to see fiscal expansion in China. We're seeing monetary expansion in China as well. We're seeing estimate revision in the positive in certain pockets of the world, and we're seeing growth accelerate as well. So there are these opportunities that we want to focus on because we are equity investors, but nonetheless, the U.S. is still a very difficult climate.
Well, we have April 11th is when JP Morgan and other banks are going to kick off earnings season for the first quarter. What do you think the big themes are going to be overall for this earnings season?
Yeah, I think margins are still the biggest theme. I mean, we've seen some deterioration in the sales forecast where there is some concern about the consumer that has popped up over the course of the last couple of months, but really margins are the story that everyone's watching and should justifiably be watching. Operating margins for the S&P 500 core reached new highs over the course of 2024. Can that sustain itself? Analysts are anticipating that those margins should recover further by the end of 2025, but maybe hit an air pocket here in the first part of 2025. So I think margins are going to be critical. Unfortunately, the inflation indicators that are meaningful for driving expectations on margins have flipped negatively. Over the last 3 months, we've seen producer prices accelerate faster than consumer prices. That's usually an indication of margin weakness to come. Tech companies are also spending a huge amount of capital, obviously, on sustaining the AI play. That is creating some margin friction in the tech space. So margins are the factor to watch.
Gina Martin Adams, thank you so much. We appreciate it. Gina Martin Adams, Chief Equity Strategist, Bloomberg Intelligence. She's up there in Boston making some money for Bloomberg. So we appreciate that, talking to our Bloomberg investor clients up there in Boston. All right, you look at, I think the term we've heard, Gina, most often so far this year from fund managers, C-suite folks, economists, is uncertainty. If there's so much uncertainty in the market, why is the VIX at 17?
Right,
why
exactly.
Why not at 30? I'm going to talk to somebody who I think has an answer to that. Joy Yang, head of Index Product Manager at Market Vector Indexes, joins us here in our Bloomberg Interactive Broker studio. Joy, are you surprised we're not seeing a higher level of the VIX, given some of the uncertainty that I think a lot of investors feel so far this year?
Yeah, thanks for having me. So yes, I think it's undeniable we're in a period of heightened uncertainty, but uncertainty is actually quite hard to measure. And as you mentioned, when you look at the VIX, it's unusually low for what we should expect in a fear-oriented market. But if you look at the Economic Policy Uncertainty Index, that's shooting straight up, and it's at its second-time high. And I think this is reflecting two kind of very rational strategies that we're seeing in the market. One is this kind of wait and see because people just don't know what's going to happen next, and they've been burnt previously. So I think they're going to park their assets in something liquid and be ready to pivot very quickly. So that's gold, and we're seeing this all-time high in gold.
Thank you for pointing out this U.S. Economic Policy Uncertainty Index. I wasn't that familiar with it, but you're right. It is now screaming higher. Baker, Bloom, and Davis are the source there. So if you're in front of a terminal, just type in, U.S. economic uncertainty, and you'll see this index, and you can graph it, and it says, "Oh yeah, that's a thing."
And to your point, Paul, because you were talking about the VIX, when I was talking to a lot of traders, especially once it got close to 30 intraday earlier this month, a lot of them didn't want to pay for puts above that because it just would have been too expensive. So I was curious, Joy, your thoughts on the dynamic there and what that tells us, because we still see realized vol picking up.
Yeah, so I think, this is just kind of this lull before we get clarity. And I think we're getting clarity on April 2nd, maybe, possibly.
Right.
But people want to stay invested. You really don't want to be holding cash. So staying invested means buying something that's liquid, but will still offer you either a hedge or some growth opportunity. And that's gold right now. It's at all-time high. And we're seeing a lot of flows into gold and gold ETFs.
And gold up another $6 here today, $3,061. I go back to the Goldman Sachs call maybe a month ago, 5 weeks ago.
Yeah.
3,100 on gold when it was at 2,800. Great call there by our buddies at Goldman Sachs. A lot of money's going to international stocks, including Asia, not just Europe, but Asia as well. Is that a trend or is that a trade, do you think?
Well, if you go back and you see this other kind of strategy people are playing is, we don't know what's going on, but we do know that, U.S. markets have been up unusually high. So I think that's really kind of the unusual period, not this correction that we are seeing, but up 20% over 2 years. So let's go back to maybe focusing things that we do know, which is, markets are volatile, but let's look at fundamentals. So when you look at fundamentals and you think that corrections are a good time to buy, well, Europe, Asia, they've had bigger corrections than what we've seen in the U.S. And if you look at fundamentals, the companies that are trading in these markets, whether it's Alibaba or BYD, they're trading at, half the PE of their American counterparts. So that's a great buying opportunity. And the same with European, whether it's European defense stocks, European other, any other industry you're looking at.
Yeah, those European defense stocks really taking off, and a lot of them, when you're looking at those PE ratios being a lot cheaper than some of their peers more internationally. How long do you think that can continue? Is this something more shorter term, just given their underperformance in recent years relative to the U.S. in that first 2-year bull run fueled by AI?
Well, this is definitely a structural shift because, the U.S. message was very clear, whether intended or unintended, as we saw in text messages this week, that we're not going to go out there and support the rest of the world, right? So, the Europeans are looking at this and they're reinvesting back to their own military autonomy. And we know that government defense spending is fiscal stimulus, right? But it's big and it's long. So these are big structural, dynamics, and we think that European defense stocks, which have already been up double digits year to date, will continue because there's going to be more to come. But I would also say don't discount U.S. defense stocks, because I think the rest of the world still needs some of the technology, and I think warfare has moved from ground to air to cyber security. So companies like Palantir, which are AI intelligence, are still going to be quite important in this space.
I look at Alibaba for a variety of reasons, one of which is my good buddy's a co-founder there. But it is, for me at least, a proxy on how investors view the Chinese stock market. If they like it, Alibaba's going to move higher. If they don't, like it's been for the last several years, it's going to move lower. Stock's up 56% year to date. Do you feel comfortable in the Chinese stock market these days?
Well, if you look at, stocks like whether it's NVIDIA or Amazon, they're up double digits, if you look back 12, or 2 years. And I think this is part of, what we tend to forget when we focus so much on one country, one stock, is that necessity is the mother of invention. And, innovation will happen anywhere. Competition will shift innovation to where, it's going to surface. And I think Chinese stocks are, they've been kind of quiet in the background. Right. We've forgotten to look at them, and now they're visible, and we've just noticed, they've been doing things also, within, their own area.
Yeah. So again, Alibaba, 56% year to date, up 85% over the trailing 12 months. So people paying some more attention to the Chinese equity markets. Joy Yang, thank you so much for joining us. Head of Index Product Management and Market Vector Indexes, live here in our Bloomberg Interactive Broker studio with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Jess, Lisa. Vice President J.D. Vance says he's joining his wife on a Friday trip to Greenland, suggesting in an online video that global security is at stake.
We want to reinvigorate the security of the people of Greenland because we think it's important to protecting the security of the entire world.
President Trump has suggested that the U.S. should some form control the self-governing mineral-rich territory of American ally Denmark. President Trump said his administration was investigating the addition of a journalist to a text group of top officials discussing plans for military strikes in Yemen. The president also expressed support for National Security Advisor Michael Waltz, who took full responsibility for the incident. The U.S. announced that Russia and Ukraine agreed to a ceasefire in the Black Sea, ensuring safe navigation and preventing the use of commercial shipping for military purposes. The Kremlin confirmed the agreement, but said it was conditional on lifting sanctions on banks and companies involved in agricultural exports. We have news this morning on Wall Street. Bonuses, they are higher. Bloomberg's John Tucker joins us now with the numbers.
The average annual bonus for last year rose by almost a third to $250,000. This is the first significant increase since the pandemic. It's an estimate compiled in a report by the New York State Comptroller. The total bonus pool was the largest since at least 1987, when records began, as revenue gains from trading and underwriting fueled a near doubling of profits. Wall Street accounted for 19% of New York State's tax revenue, and the comptroller estimated that the 2024 bonuses will generate $600 million more in state income tax revenue and $275 million more for New York City compared to 2023. I'm John Tucker, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Jess, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. That bonus news it's always important here in New York City because, financial services is such a big industry here in New York City, and the folks here, when they get paid well, they pay a lot of taxes. So that goes to the city. They spend money in the city. That's all beneficial. But it's a little bit different. Like when I worked on Wall Street, I had a few years where my bonus was 97% of my total year compensation.
Really?
Yeah, it was that big. Now they've changed it where you get a bigger salary, and I think your incentive compensation is a smaller percentage.
How do you feel about that after your experience doing it for decades?
I don't know. All I know is, once you got back from Labor Day, all you thought about until year end was jockeying for my bonus. The whole September, October, that's all you're doing. So, so maybe that, I don't know. But I think let's just make it less risk incentive, I think is kind of what Street was saying. So now it's a little bit more salary, less bonus, but the total numbers are up, which is good for New York City and the other parts of the world where they have
Consumer
a lot of financial
spending.
services. Exactly. So we'll stay on top of that. Michael Barr reporting that news. S&P 500 unched right now. There's nothing happening. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, it looks like the tech rebound that is looking to be running out of steam. It's dragged lower by drops in Tesla, also chip stocks. Tesla shares down about 1%. NVIDIA off more than 1% as well. And speaking of NVIDIA, Financial Times says that its sales may be affected by China's new energy rules for advanced chips. We'll start with NASDAQ futures, down 0.1%, 26 points. S&P futures, little change, down about 2 points. Dow futures, little change, up about 23. We have the 2-year yield, 4.0%. That's little change. And the yield on the 10-year, 4.34%. That's up 2 basis points. To currencies, the pound weakened on an unexpected slowdown in UK inflation. Right now, it's down about 0.3% at 128.99 against the dollar. The Bloomberg Dollar Spot Index, little change. This morning, shares of Nintendo rose by more than 5% over in Tokyo. Sources saying the company will soon release a new version of its popular Switch console. And Canadian convenience store operator Couche-Tard said that seeing strong interest from PE firms in buying out about 2,000 of its North American stores, which may be sold if its bid for Seven & i moves forward. And finally, in other news, about 40 bankers laid off from UBS, BNP, other global firms firms, well, they've joined Chinese brokerages in Hong Kong in the past year. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Lisa, Jess, are you cheesesteak aficionados in Philadelphia at all? Do you have any experience?
I did have one there. It was amazing.
Okay, so you know where'd you go? Where'd you get your cheesesteak? Do you remember?
I don't even remember. We were down at some softball tournament. We popped in somewhere.
Okay,
in Philly.
that's good.
I'm not an aficionado.
Okay, Jess, all right, grab some of your hipster friends from New York City one Saturday, hop on the train, go down to Philly, and do a cheesesteak.
I'm down to do it. I mean,
tour.
Where's the spot to go?
Well, here we go. Our next guest is going to help us out on that. Steve Sosnick, he's got a real job, Chief Strategist, Interactive Brokers, undergrad, graduate school at the University of Pennsylvania, so he spent a lot of time in the town of Brotherly Love. Steve, where's the go-to place for you for cheesesteaks in Philly?
It's a pain in the neck, but I go to D'Alessandro's, which is sort of Roxborough, northwest Philadelphia.
Interesting.
But my last trip down, which was probably a couple months ago, I went to the reopened gyms. It had been closed for years for a fire. It had always been among the best, and it's back and just as good as ever.
They're all awesome. Everybody's got their favorite down there, but it is just Philly cheesesteaks are the absolute best. So whenever we get somebody in here with a little Philly cred, I always ask them kind of what their cheesesteak go to. All right, Steve, you got a real job here. Chief Strategist for Interactive Brokers here. How do you talk to your clients these days about what was a 10% pullback in this market, kind of mid-February to mid-March, but now we've kind of bounced back a little bit. How do you kind of positioning the market for your clients?
I think we're still seeing a lot of uncertainty here. And I guess the truism that I'm using right now is most corrections don't become bear markets, but all bear markets start as corrections. And this is really the period where we have to figure out what we're going to see. And I think, we all know investors hate uncertainty. And I think until at least next week, when we get some clarity on the tariff front, it's very hard to sort of say with any sort of assurance that this is the path forward, because we really don't know.
I was looking at the list that you put out of your most active ticker symbols. So probably not surprisingly, Tesla, Nvidia, Palantir, the top three on that list. And it's interesting, too, because I know JP Morgan's derivatives desk was talking about how much, like $8 billion being pumped into Tesla stock through last Thursday throughout 13 trading sessions, despite, obviously, the declines we've seen. When people like to look at retail traders as more as kind of the contrarian, and they're not giving up, they're not throwing in the towel, what do you think this means more broadly for the correction we've seen so far?
Well, at some point, it depends who's got the more ammunition, who's got more staying power. I will say that our customers the whole way down were big net buyers of their favorite names. Bear in mind that certainly for the last 2+ years and for the better part of 5 years, and remember about half the investors are new, let's say within the last 5 years, buy the dip has been a great strategy for them. And so, if you've got a strategy that worked almost perfectly for the better part of 5 years, you're going to stick with it. What I will say is, interestingly, over the last week or so, that buy the dip fervor had kind of petered out a little bit, which is tough because it was just before the market bounced. I don't know if that's because they lost faith or just sort of lost buying power, but I do think that it was interesting that we, they're still buying, they're still net buyers, but at a less aggressive pace than they had been.
What do you see here are there some sectors that screen well for you these days?
I'm still sort of in the low beta, high dividend camp. And that's been something I've been sort of talking about for several weeks. And it has worked out pretty well. Broadly speaking, value over growth has been a big winner. I'm not in love with small caps right now because I just find they're too fluky. There's too many unprofitable ones. There's always a small cap to love, but in general, broadly speaking, not as an individual stock analyst, as a strategist, I can't fall in love with them. But I think right now, again, with the uncertainty out there, I think, when it's volatile, I think that's probably a time to move into lower volatility names and get a little bit of a ballast from a dividend-paying portfolio.
What are the value stocks that your clients are buying?
It's funny, Jess, because I don't have a ton of clarity into what I see these top 25 lists. They wall me off from a lot of it.
Because a lot of them are probably not surprisingly more growth and technology stocks.
The top names at our firm, which is really what I have clarity into, is all growth, and actually in many cases hyper growth, because of our top 25 list that I looked at yesterday, 5 of them were leverage names. It was like TQQQ, SQQQ,
Right.
double levered NVIDIA, double levered Tesla, and triple levered stocks. I mean, so these are very active traders, and so what pops up on our most active list is not going to be somebody buying and holding Procter and Gamble. It's going to be somebody trading triple Qs.
But are you saying like people should be buying like a P&G?
I think in general, if you're an investor, I think that's probably the way to go. If you're an active trader, traders are going to trade.
So what happened? What does a typical Interactive Brokers client do when the market's selling off, like we saw, earlier in February, March?
As I said, they were net buyers.
Yeah, that's what I've heard.
They were buying into it. Now, the term that I'm going to use, and I steal this from my friend Henry Schwartz at the CBOE, is pro-tail. I think that describes our customer, our most active customers best, because they sort of straddle the line between mom and, they're not mom and pop, but they're, we have everything from mom and pop to big institutions. But I think our list is dominated by, individuals and small institutions who sort of blur that line to a large extent.
Something I'm curious about, I was talking to Danny Kirsch over at Piper Sandler a few weeks ago, and he was talking about this is when the VIX was getting closer to 30 at that point, and how it was more of a trader's market, because we talk so much, because it typically is a Fed market, right?
Yeah.
We've talked about this for years, and over a decade, even coming out of the housing crisis. So what's the difference between, especially if you're like a vol trader, who a lot of them I would talk to were loving once the VIX was getting closer to 30. What do you think it means for them if the VIX is below 20? Because there's other pockets where we're seeing single stock vol continue, even though the VIX is still below 20.
Here's the thing I think that people lose with VIX is it's very dependent upon intramarket correlations. And so one index that I watch alongside VIX, and if you go to our website, I use this chart periodically, is I chart this index that the CBOE has called COR1M.
Yeah, and they also have the CO3 and 2.
Geek talk.
Sorry, that should be like a big red light going on.
But
Tom would yell at me.
Because I noticed it picked up. It was at like a 65-day trading session high. I mean, obviously, if you pull it back, it's still at historic lows or hovering around that, but still correlations are picking up. Obviously, aren't you going to see more of the market move in sync?
So we have seen the markets move in sync. It's when markets get nervous, they move in sync. When markets are going up broadly, you see more dispersion. It's more of a stock picker's market. When markets are plunging or rallying off that bottom, they tend to do so in sync. And so when I look at the COR1M, because 1M is for 1 month, VIX is also a 1 month index. So it syncs up. And I look for times where they diverge. If correlations are falling, but VIX isn't falling, that usually tells you markets are getting a little nervous. In this case, actually, quite the opposite's happened. VIX has plunged, but the correlations have not come way back down. So it tends to me to be thinking about a little bit more of a buying opportunity in terms of VIX. We were talking about buying dips and buying low, sell high, but that applies to VIX and volatility hedges as well as anything else you might buy.
In that dynamic, is that a stock picker's market?
Actually not. Stock picker's market tends to be when you have low correlations, high dispersions, because that is, do I want to buy, pick on Procter & Gamble again. Do I want to buy Procter & Gamble, or do I want to buy, some other consumer products company, or do I want to make sectoral bets? When in this case, when you have high correlations, everybody's rowing the boat in one direction or another.
All right. I don't know about you guys. I am deep into the weeds of this D'Alessandro's website here. I'm going with
I was wondering what Paul was searching over there.
I'm going with the cheesesteak hoagie. It looks for $16. What a deal. So anyway, there we go. That could be a road trip from the Jersey Shore, D'Alessandro's in Philadelphia. Steve Sosnick, thanks so much for joining us here. I think we talked some stocks, but I got a good idea for a weekend road trip, D'Alessandro. Steve Sosnick, Chief Strategist, Interactive Brokers. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. After 3 straight days of gains on Wall Street, futures pretty much struggling to find some direction. We have S&P futures down about a point, Dow futures up 39 points, and NASDAQ futures down 33. With the 2-year yield, 4.0%, that's little changed, and the yield on the 10-year, 4.35%, that's up 3 basis points. To commodities, copper trading at a record, traders pricing in that possibility of hefty import tariffs. It's up about 1%, but was up as much as 3%. We go to gold. COMEX gold, $3,061 an ounce. Over to oil. Brent crude, $73 a barrel. WTI crude, $69 a barrel. The Bloomberg Dollar Spot Index up about 0.1%. More economic data out today. Durable goods orders for February. Expectation was for a drop of 1%. Came in with a rise of about 0.9%. The prior was a rise of 3.3%. Tomorrow, we moved on to revise fourth quarter GDP. We also have weekly jobless claims and pending home sales. And then Friday, it's a Fed's preferred inflation gauge, talking about the core PCE index. A few companies making news. Apple CEO Tim Cook, he visited China's artificial intelligence hub. It's also the hometown of DeepSeek and Alibaba. The company donated $4.1 million to Hangzhou's Zhejiang University. And in other news, private equity eyeing a $12 trillion opportunity to fuel its next golden era, talking about employer-sponsored accounts like 401ks. Bloomberg saying Blackstone, UBS, well, they're among those who are said to be pitching Washington to kind of make it easier for businesses to offer PE investments in retirement funds. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Economic indicators and Bloomberg surveillance brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more. All right, you got a market that pulled back 10%. It's bouncing back now. What do you do here? Do you say, I'm not down for all this uncertainty here? Maybe I go to the fixed income market. Maybe I just park it in gold, which is up again today at $3,060 an ounce. What do you do? Our next guest has some thoughts here. Stephen Colano, he's the CIO of Integrated Partners. They're up there in that Boston area. Stephen, thanks so much for joining us here in our studio.
Thank you.
What are you telling your clients these days, given kind of the, if nothing else, the noise coming out of Washington, D.C., the noise impacting financial markets? How do you tell them to kind of navigate this?
Yeah, important for our clients, kind of the typical retail investors, right? So first and foremost, we're always talking about time in the market, not trying to time the market, right? Okay. So just have a disciplined financial plan and see through the uncertainty. The other thing I always focus on and really kind of pound this home is markets are driven by fundamentals. Markets are driven by earnings at the end of the day. So there's lots of uncertainty, and I know that's a key theme throughout the last couple of weeks. But what we've been really focusing on is earnings expectations. And while you have started to see some negative revisions, and Adriana mentioned it earlier, they're still much shallower. If you look at the median trend in negative earnings revisions going back to 1985. So far this year has been much shallower than expected. A lot of that driven by the Mag 7. So the Mag 7 earnings expectations are actually up compared to the remaining 493 in the S&P 500, down about 2 or 3%, 5% give or take so far. But so far they're down, but still hanging in there. And so you're still seeing expected earnings growth of now 10%. That's down from the beginning of the year. I'm a huge follower of David Kostin's work at Goldman Sachs, right? Yep. They came into the year at like bottom-up consensus estimates are around 274, down to like 269. Our base case scenario actually this year for earnings growth is around 8%. If you look at our S&P 500 target, we do kind of a probability adjusted S&P. Believe it or not, we're actually at 5730 when we kind of take on different scenarios. And we'll update that. We usually update that after each earnings season, kind of get a sense of what earnings trajectories are. But if you look at each tranche of how we base case that out, we have about a 10% probability of kind of bear case, so recession. So that's typical recession. Earnings are down peak to trough of like 25%. So that goes 246 and 24 down to 185. It's about a 10% probability, 15% probability of kind of slowdown in growth, mild recession, 0% earnings growth. Base case is 8%, and then we have two upsides. When you kind of probability that adjust, it's like 5730. But interestingly enough, there's a lot of opportunities underneath the hood there. If you think, okay, say we're kind of flat from here to the end of the year, Dividend yields. Previous guest was talking about dividend. If you look at Dividend Aristocrats Index, NOBL as an ETF, it's up 1.5% this year. The other thing we've been doing in portfolios is bringing actually equally weighted S&P 500 ETFs. GSEW is the one we use a lot. That's about up 50 basis points this year. So kind of broadening out for more exposure, bringing in some more industrial weights and some industrials materials where you've seen negative revisions. So looking for opportunities that are more stable, so to speak.
I'm curious too, because when we're talking about earnings growth, and we were talking to Gina Martin Adams from Bloomberg Intelligence earlier about this with the sell side consensus model pricing at around 9.5% earnings growth for the S&P 500 in 2025, down from around 13% at the start of the year, but still above the 10-year average. What I'm wondering is the closer we get to April 11th, obviously getting past that April 2nd deadline for the reciprocal tariffs, we've already heard from companies like Delta that have guided lower. You've heard some from retailers that reported in recent weeks that are cautioning about this year. But will we see the old song and dance where you're lowering the bar to more easily beat those expectations? And should we expect earnings growth to still remain pretty strong, just given the fact that the economy's been strong coming out of COVID relative to obviously where it was before that?
Yeah, you mentioned two names that are on my radar, and there's kind of, if I think about Delta and American, obviously tragic incidents aside, but they talked about slowing demand, so that caught my attention, right? And then you bring in Target, Walmart, and even Best Buy. Like, hey, five companies is not a huge sample set, but it's enough broad, like, all right, there's something going on there in terms of a more value-oriented consumer or slowing consumer demand. And to your point on kind of slowing earnings growth, right? Like, yeah, margins, if you look at negative earnings revisions, so far we're down about 2%. Median negative earnings revisions historically going back again to 85. Right now, you'd be down about 6%. A lot of that is being held up in the Mag 7. So I would expect, just to your point, we continue to see negative earnings revisions, and that kind of lower the bar and then beat, lower the bar and then beat. But I still think we see positive earnings growth this year.
And even next year, I mean, 14% growth, that really hasn't budged at all.
2026, we're at, again, going by David Costin, like we're at like 305, like 14% earnings growth year over year in 26. In terms of the negative revisions we've seen so far, 80% of that is coming from margins, 20% coming from revenue. Right. So I think margins are the big one, especially given the last time we saw a trade war. You saw earnings expectations kind of depress on the back of margins. And that was just a much more concentrated kind of set of tariffs compared to this time around.
Stephen, thanks so much for joining us. Appreciate you coming in. Stephen Colano, CIO of Integrated Partners, is up there in Boston, but he's joining us here in our New York studio. Appreciate that. With our news in New York City, here's Michael.
Thank you very much, Paul. Jess, Lisa, the U.S. says Russia and Ukraine have reached a ceasefire deal in the Black Sea, but the Kremlin says it's conditioned on sanctions being lifted for banks and agricultural exporters. The White House didn't mention that in its readout on the deal. We get more from Bloomberg's Rosalind Matheson.
The statement last night from the US talked about giving Russia relief in terms of bringing it back into being able to ship fertilizer more fulsomely, access to agriculture, possibly to payment systems, to easing the cost of insurance for Russian shipping. So there seem to be quite a few goodies in the bag there for Russia already out of this. And the question is this Russia just slowly walking towards some sort of broader ceasefire? And does that at some point become frustrating for Donald Trump?
Bloomberg's Roz Matheson. President Trump announced an investigation into how a journalist was added to a text group of top officials discussing plans for military strikes in Yemen. Meanwhile, The Atlantic's Jeffrey Greenberg has released some details about what was in that, Goldberg, released details about what was in those texts. There are concerns about the Trump administration's plans for Social Security as the president's pick to head the Social Security Administration faced tough questions during his confirmation hearing. Advocates warn that Social Security is already understaffed. The administration has announced plans to cut 12% of the agency's workforce. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Jess, and Lisa.
All right. Michael Barr, thank you so much. We appreciate that. Our last guest, Steve Colano, he's up there in Integrated Partners up there in Boston. I say, where do you guys go to the beach there? And he goes, well, where I live, we go to Crane Beach. So I Googled Crane Beach. It looks beautiful. Yeah. But they got sharks there. I mean, it's a problem up there.
No thanks.
A couple of my buddies, and they're Jersey guys, so they should know better. They're relatively smart dudes. They both bought houses up at Cape Cod. Now, Cape Cod is spectacular. I love Cape Cod. But the water never gets warm. And then when it does get warm, you got sharks there all over the place. What are they thinking?
No thanks.
It's crazy up there, but I love that part of the world up there in New England. The beaches up there.
It is beautiful, though. I have
it
to
is
say.
spectacular.
Very scenic.
Martha's Vineyard, the Cape. It's awesome.
Yeah. I might stay out of the water, though.
You got to go to you're Jersey guys. You go to the Jersey Shore. I mean, what are you thinking, these guys? But anyway, that got me thinking. So Crane Beach looks very nice. So next
should all make a trip when Tom Keene returns. We'll all go together.
I'm sure he's got a story or two about the beaches up there. S&P up 4 points, Dow up 82. The NASDAQ down 7. So a little bit of a mix out there in the marketplace. We're going to have more coming up in just a moment. Gold higher. How about that? This is Bloomberg.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
All right, Jess Menton, Paul Sweeney, Lisa Mateo. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So go over to youtube.com, you search Bloomberg Podcast Live, and that's where you will find us. A little bit of movement in the index level. Not much happening here today. But let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Lisa Mateo. Lisa, what do you have?
All right, I want to start with GameStop, struggling video game retailer, this favorite of retail trailers during that meme stock frenzy in 2021. So the big news there is that its board has adopted this policy to buy Bitcoin. It's really trying to capitalize on the surge in the digital asset. Its shares, well, they rose about 6% in after-hours trading yesterday. This morning, they've been up as much as 17%. The stock down about 19% so far this year. But it's more companies. They're using corporate cash, maybe borrowed money to buy Bitcoin. You think about Michael Saylor's strategy, right? The software company known as MicroStrategy. It really started to kick things off. It acquired more than $40 billion of Bitcoin. It's seen its share price soar. So the question really is, what's the appeal to investors, right, of public companies that have a big Bitcoin holding on their balance sheet? They're looking to gain exposure to the asset class in the stock market while not dealing with Bitcoin directly. So that's the reason why this appeal to it is.
Stock's up 10% today.
Yeah,
wow.
So it's done pretty well.
All right,
but they did report fourth quarter revenue declined about 28% to $1.28 billion from the year ago period.
Does that matter?
Yeah, exactly. After this big news, I know. Same is kind of true for Dollar Tree if you think about it.
I love the dollar stores because
Yes.
I don't know how you differentiate between them as an investor. Dollar Tree, Dollar General.
It's interesting
It's all
because
value.
they, along with Target, used to be housed in the discretionary sector in the S&P 500. Then 2 years ago, they got moved over to the staples sector. A lot of it had to do with their grocery percentage business. So they're there along with Walmart in staples category.
Yeah, so that's the big problem that they had. The Walmart and Aldi too was like their big competition.
Aldi's all over the place now.
Yes, they are. I go there. I love Aldi.
Okay.
Let's get to Dollar Tree. Okay, so their share, it's been up as much as 4%, right? So it's kind of this disappointing end because they've really been trying to establish itself as this discount giant. So basically it's selling its family dollar chain for about $1 billion to Brigade Capital Management and Macellum Capital Management. And that's really a big discount because it was nearly $9 billion that it paid for Family Dollar when it bought it about a decade ago. The deal expected to close next quarter. It's likely going to cut those Dollar Tree stores count in half, so you'll probably see less of the stores around. I mean, it's not a total surprise. The company did say in June it was looking into different options. But yeah, facing more competition, guys. You said it.
Yeah, I mean, there's just, I don't know about that part of the market because you hear about how do you compete against Walmart and Target? But I guess if you're Dollar Tree and the Dollar Generals, that's another level. It's a different business, I guess, a little bit.
And maybe a different shopper, too.
Exactly. And there's things you can find even cheaper at the dollar stores than some of these other retailers.
Exactly.
All right, how about Trump Media and Technology, DJT?
You remember yesterday, right? We spoke the news that it broke that it was tapping Singapore's Crypto.com for this Made in America ETFs, and that had its shares higher. But this morning, we're seeing a little bit of a shift. It's lower. Shares were down as much as about 3%. So just to recap, the products are going to be available this year in the U.S., Europe, Asia, pending regulatory approval, of course. But it's going to include Kronos. That's a virtual currency affiliated with Crypto.com. But what I found interesting about the story is that Crypto.com, if you remember, it was previously in a legal battle with U.S. regulators last year. But then it dropped the complaint after Trump's election victory. So the administration's really been starting to ease those restrictions on the digital asset industry. So it's just quite a difference that we see from yesterday and then moving into today, where those shares are starting to get lower now.
The stock's down 33% year to date, off about 60% over the trailing 12 months. So for the DJT. So
the DJT.
Keep an eye on that.
And he's Trump Media's largest shareholder, the president.
Yep.
Bailey Lipschultz on our U.S. equities team covers this often, along with IPOs and the meme stocks. So it keeps him busy.
Okay, very good.
I'm sure.
All right, for more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes of the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. So got that from Lisa Mateo. S&P up 2.5 points, Dow up 63, the NASDAQ down 10 in the futures market. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Danielle DiMartino Booth, get the sense of what's happening with this Federal Reserve. How did you think this Fed is going to go? 1 cut, 2 cuts, a rate hike still in play? So we'll talk to Danielle DiMartino Booth at QI Research. David Gura, the host of the Bloomberg Big Takes podcast, he's going to join us as well. He's got an exclusive interview today with Senator Elizabeth Warren, so that's going to be very interesting. Skyler Weinand, CIO at Regan Capital, is going to join us as well, get her thoughts on the markets. Going to be in our studio. Jess Menton is sitting in for Tom Keene. I'm Paul Sweeney with Lisa Mateo. Bloomberg Surveillance today is brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Lisa Mateo has got a Bloomberg Business Flash. Lisa, what do you have for us?
And you got it. The tech rebound kind of looks to be losing its steam a little bit. It's dragged lower by drops in, for example, Tesla and chip stocks as well. We have Tesla down more than 1%. You have Nvidia off about 1%. Speaking of Nvidia, the Financial Times reporting its sales could be affected by China's new energy rules for advanced chips. Let's start with NASDAQ futures. They're little change, down about 13 points. S&P futures, little change, up about a point. And Dow futures, up about 0.1% or 58 points. We go to the 2-year yield, 4.0%. That's little change than the yield on the 10-year, 4.39%, and that's up 3 basis points. To currencies, the pound weakened on an unexpected slowdown in UK inflation. Right now, it's down about 0.4% at 128.91 against the dollar. The Bloomberg Dollar Spot Index up about 0.1%. Few companies making news. Apple set to unveil new software at its developers event the week of June 9th. It's also expected to announce redesigned iPhone, iPad, and Mac operating systems. And sources say Yesterday, Qualcomm launched an antitrust push against ARM in the U.S., Europe, and South Korea. It's accusing its biggest supplier of anti-competitive behavior. And finally, shares of Nintendo, they rose more than 5% in Tokyo. Sources saying the company will soon release a new version of its popular Switch console. And I know moms and dads are saying, I gotta buy another one now. That is your Bloomberg Business Flash. Paul and Jeff.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton is sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live, Bloomberg Radio Live. Both of it get you to kind of where we want to go. Where is the Federal Reserve going to go? We've had a lot of economic data out there that I guess with the hindsight still looks okay. But boy, if you look at some of the survey data, whether it's the UMich data from a couple of weeks ago, which we'll get some updated UMich data on this Friday, whether it's some other survey data, it shows that the consumer's a little bit concerned out there. Inflation expectations a little bit heightened. So how does the Fed take that into account? Well, I know Danielle DiMartino Booth, she'll have some thoughts here. She's the CEO and Chief Strategist at QI Research. Danielle, what's the data you're looking at to give you a sense of where this economy really is today, maybe where inflation expectations are today? Because the Fed probably needs to be a little bit nimble here, don't they?
Yes. Good morning, and thank you for having me. And absolutely, the Fed does need to be nimble. We actually saw with the durable goods report that came out, kind of the first hard data that agrees with, across the board. Every single regional Federal Reserve survey has shown reduced capital expenditure planning going into the future, reduced employment going into the future as well. And most of what we've been seeing has been, as you said, soft survey data. Now we have hard data to back that up with this morning's report. And so the Fed's going to have to start thinking. The Dallas Federal Reserve did some great work about a year ago that showed that it is investment, business investment, that leads the U.S. economy in and out of recession. With the looks that is going to be turning down, and again, corroborated by every single regional Fed survey, all the way down to the Richmond Fed and Philly Fed that we've had these last few days, the Fed's going to have to become more concerned, as we saw in that CFO survey, about the possibility of recession. So they're going to have to balance the two when they're making their policy. There's two non-farm payroll reports before they meet again on May 6th and 7th.
And that's what I was going to say. It's 6 weeks away before we get the next Federal Reserve decision. And you were mentioning those key economic data points that are going to be coming ahead of that, as well as that reciprocal tariff deadline on April 2nd here. So what's the playbook, you think, ahead of this Federal Reserve meeting? And what do you think needs to happen in the data, depending on what could force them to move in a particular way?
So, given the magnitude of the Challenger grain Christmas layoffs, 172,000, only 62,000 of which were attributable to the public sector in February, we're at about the same run rate. We're running at about 150,000 layoffs announced in the month of March. It's looking like the Fed might get to that 4.4% year-end unemployment rate target by the time they meet again. So I think that the real risk is that Powell's going to have to pivot again in favor of the employment mandate if what we're seeing on the ground with layoffs and, of course, BCY Go bankruptcies running at about a 22 pace for 50 million or more in liabilities on the terminal that you can follow. They're going to have to start paying more attention to what higher for longer is doing to the real economy.
So what is the focus here right now, do you think, of the Fed, Danielle? Is it inflation? Is it employment? How do they balance that these days?
So they're definitely focused on inflation expectations. We saw a fairly dovish voter, Austin Goolsbee, saying we really have to pay attention to see if these inflation expectations become unhinged and start to filter their way into the actual inflation metrics. But we haven't seen that yet. And the fact is, what we're hearing from one company after another is that there's a margin squeeze going on. They are having to deal with higher input prices. There was a lot of stockpiling ahead of the potential for imposed tariffs, not that we know what they're going to look like yet, but companies are reporting one after another that they cannot pass through these prices to the end consumer, whether you're talking about Walmart or Dollar Tree.
That's interesting, too, because when I've talked to Tom Barkin before at the Richmond Fed, he talked about how he would actually look at the price mix volume when you're looking at a lot of these companies and consumer packaged good companies, whether it's like a Coca-Cola, PepsiCo, Kraft, Heinz, and especially what it was meaning for inflation and things like that. What do you like to look at? Because, I mean, you have so much experience. You previously were an advisor at the Fed Bank of Dallas during the global financial crisis. So when you're looking at some of these key consumer type names and what do you think it could mean for inflation? Other forms of growth on the other side of the employment thing. What are you watching there?
So, I think everybody's focus right now is on consumer discretionary. But to Barkin's point and to your point, we're actually seeing the staples come under pressure because of what we've heard from some of the lowest cost retailers out there. And that's that some U.S. households are even beginning to cut back on essential spending. They're moving away from brands. They're moving away from packaged goods, whereas these companies were able to pass through these prices for several years following the pandemic. Now they're hitting a wall. McCormick was the latest to come out and make those types of comments here in the last 48 hours or so. So we really do have to be cognizant of the potential for a margin squeeze here. And that, I think, has to be on the Fed's radar. Again, it is business investment and not consumption. Despite consumption being a record 71% of U.S. GDP, business investment has always led the U.S. economy in and out of its cycles of expansion and recession.
I'm looking at the WIRP function, Danielle, on the Bloomberg terminal, the world interest rate probability. It looks like the market's pricing in maybe just a little bit more than 2 rate cuts this year.
I feel like it's always all over the place, though, when we look at that function.
It is. And I have, not a whole lot of confidence in it. Not to say it's not very representative or interesting and useful, but boy, it's all over the place. But a little more than 2 rate cuts this year, Danielle, does that seem reasonable to you?
I really think we're going to see maybe double that or more.
Wow.
We're setting up for the September meeting a lot like, we're setting up for the May meeting a lot like we did in between July and September of 2024. Some non-farm payroll reports are a little bit lagged in terms of their release. The April report is actually released on May 2nd. So that is 5 days before the Fed meets again, but during blackout. So the Fed's going to have to be very, very cognizant of its employment mandate, because I think that in particular is moving in such a way, the momentum, we're seeing it with fewer jobs in the consumer confidence report. We're seeing it with 66% of Americans in UMich saying that they anticipate the unemployment rates going to rise in a year. We've never been at these levels, whether it's Conference Board or University of Michigan, when the U.S. economy has not already been in recession, looking through the rearview mirror.
All right, and we're going to get some more new University of Michigan data this Friday, so we'll be having that for you as well. Danielle DiMartino Booth, she's the CEO and Chief Strategist at QI Research, one of the smarter folks we talk to when it comes to all things Federal Reserve and kind of how the Fed's trying to deal with current economic conditions. So we appreciate getting a few minutes of her time. Let's pivot now to Washington, D.C. David Gura, host of the Bloomberg's Big Take podcast. He's got an exclusive interview later on today with Senator Elizabeth Warren. David, thanks so much for joining us here. What's the agenda for your discussion with Senator Warren?
Well, the peg for it is the confirmation hearing tomorrow for President Trump's pick to head the SEC. That's Paul Atkins, who was once an SEC commissioner, worked on the SEC staff, and has been a consultant in the years since. And she, the senator, in a 34-page memo, has expressed some reservations about him. So I want to get a sense from her of how she's thinking about his nomination and regulation more broadly. Obviously, it's something that she has studied and taught about, cares a lot about. And I want to get a sense from her of how she's looking at this changing regulatory landscape here. But more than that, I kind of look at her as a fascinating figure when it comes to Democratic opposition in the face of this new Trump presidency. She, by virtue of the committees that she sits on, she's on armed services and finance and banking, has been a very active participant in a number of these confirmation hearings for the highest profile members of President Trump's team, including Scott Bessent and Pete Hegseth. So I want to get a sense from her just about sort of how she sees the Democrats' role here going forward, how they've been mounting some opposition to the policies that he's put in place, and sort of where she sees opportunities for Democrats going forward, Paul, to make a difference and try to push back on some of the policies he's put in place.
And more specifically, what about the questions when it's regard to the regulatory landscape and also what she said recently about crypto?
Yeah, well, let me start with just the regulatory landscape, and something she brings up in that memo to Paul Atkins is the fact that if you look at the SEC today, it's not running at full capacity. It's supposed to be a 5-member commission with Democrats and Republicans. Right now, there are 2 Republicans and 1 Democrat. Paul Atkins were to be confirmed, 3 Republicans and 1 Democrat, and the president hasn't indicated he's on his way to nominating another Democrat or 2. So it's an imbalanced commission. It's not the way that it's supposed to be structured. And you can kind of look at that in complement with what we see at the FTC, the Trade Commission now. Of course, the president fired or got rid of 2 of the Democratic commissioners on that body as well. So we're seeing this kind of erosion of these independent commissions as part of this broader strategy to change the way that the regulatory landscape looks in this city, looks in the financial markets more broadly. And I'm curious sort of how she sees any opportunity to push back on that or make changes there. It seems like it's a very effective way to both kind of curtail intellectual diversity on those regulators and also their capacity to have the bandwidth to deal with many cases. Talking about crypto, I mean, this is something that comes up as well. Paul Atkins was a consultant to FTX, the failed cryptocurrency company that Sam Bankman-Fried founded and ran. She has hesitations and wants to talk about that. And then what's interesting, too, is the way that this stablecoin legislation is now percolating through the Senate. It passed the Senate Banking Committee with Democratic support. Mark Warner, Kirsten Gillibrand are in favor of it. Senator Warren is still against it, and that could get a vote in the coming days. I'm curious sort of how she feels about it and sort of how she's thinking about the role that crypto is playing here more broadly. You know, I talked to Chair Gary Gensler in his final days in that job at the SEC, and he did as he often did, rolled his eyes when you ask questions about crypto because he saw it as such a small market compared to other capital markets. But it continues to take up so much oxygen and is of such interest to so many people. I'm curious of how she sees its role here going forward.
David, a lot of political observers are, I think to a certain degree, surprised that there hasn't been a more, I guess, a greater and more visible pushback against President Trump by the Democratic Party in general. Doesn't seem to be a voice for the Democratic Party these days. Senator Warren, of course, is a high-profile member of that party. Has she voiced any issues about that or any opinions about that?
You know, this was a driving reason why I wanted to come down here and have this conversation for the podcast. We're going to talk for about half an hour, and I think that the future of the Democratic Party is so interesting, and I want to give her credit. She has been thinking about and talking about the future of the party well before President Trump's reelection, well before that decision by the Minority Leader Chuck Schumer to support this Republican continuing resolution. But that was a signal moment as she sees it. She did not support that piece of legislation, and she has been a lawmaker who has gone to her home state, to Massachusetts, and held town hall meetings, and she did that in Lowell, Massachusetts a few days ago, and she said she thinks that Chuck Schumer was wrong in that regard, and she didn't linger on that. I'm hoping to talk to her more about that. I mean, I think there's not a crisis of leadership within the party, but I think this is a moment when a lot of Democrats, Democratic voters are thinking about seriously who should be leading this party, who has the aptitude or capacity to do that, and I think it's something that'll be fascinating to hear from her.
I have to ask about, especially because Senator Warren, as you know, sits on the Armed Services Committee, and especially after Pete Hegseth had disclosed secret war plans in a group chat with an Atlantic journalist that the Atlantic had reported about. What do you plan to ask about that and hear from her?
You know, she's addressed this briefly on X. She commented on the whole incident and said that if that Pete Hegseth should resign as a result of this. She hasn't addressed it in an interview or on camera. So I'm certainly going to ask her about that over the course of our interview. But she is somebody who, during that confirmation hearing for Pete Hegseth, expressed, shall I say, a lot of reservations about his nomination. Didn't think that he was the right person for this job. I'm curious sort of what she thinks should happen next. Again, I think an overarching theme here to this conversation and this moment is what Congress is able to do. And I'm very interested in sort of what she sees the role of lawmakers being here as they try to get to the heart of this scandal that's really kind of captured a lot of attention here in Washington and beyond. We'll see what she has to say. But as you rightly point out, she sits on that very powerful committee, and I think her words will have a lot of importance.
David, what do you think she believes her role is in this Democratic Party in opposition to President Trump?
I think that she sees her role as one to sort of galvanize Democratic voters, to sort of draw focus on what the Democratic Party stands for. She's really highlighting the seriousness of this moment. Something else that I want to ask her about is sort of this distinction: are we in a constitutional crisis or not, or what's the threshold for being there? And you know, I think that there is going to be a lot of the parlor game of who should be leading the party, and I don't mean to diminish the seriousness of that, but I think that she wants to make sure that Democrats are aware of the seriousness of this moment, or aware of what's happening to the regulatory landscape here, the kind of government landscape more broadly in Washington as a result of President Trump's reelection, and understand sort of what the ramifications of that might be. candidly, she's also a lawyer who's taught at Harvard Law School and has a kind of strong reverence for the courts and sees that as a mechanism by which people can push back on some of these decisions the administration has made. I'm curious sort of how she sees the effectiveness of that so far, and also how she kind of regards that tension where things are moving so quickly on the part of the administration. Can the courts keep up being inundated with all these executive orders and all these changes?
David, thank you so much. We really appreciate your time. David Gura, the host of the Bloomberg's Big Take podcast. He's going to be sitting down later this morning with an exclusive interview with Senator Elizabeth Warren. Bloomberg Radio and Television will bring that taped interview to you later this afternoon. So we look forward to that with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Jess, Lisa. Palestinians have chanted against Hamas during anti-war protests in the Gaza Strip. It is a rare show of public anger against the militant group that has long repressed dissent. Hamas is weakened but still rules the territory 17 months into the war with Israel. Protesters say they chanted against Israel, Hamas, the Western-backed Palestinian Authority, and Arab mediators. Hamas has violently cracked down on previous protests. The protest came days after Israel's renewed offensive shattered a ceasefire. President Donald Trump is downplaying the texting of attack plans to a group chat that included a journalist as the only glitch in 2 months of his administration. Top national security officials texted plans for upcoming military strikes in Yemen to a group chat in a secure message app that included the editor-in-chief for The Atlantic. Bloomberg Government's Jack Fitzpatrick has more from Washington.
Overall, he and his national security advisor, Mike Waltz, have not pushed back on the reporting in The Atlantic over the use of signal leading to the bombing on Yemen that you saw from Pete Hegseth, who vehemently sort of attacked Jeffrey Goldberg, who wrote about it. Mike Waltz said it wasn't a staffer responsible. He takes responsibility.
Bloomberg's Jack Fitzpatrick. Meanwhile, The Atlantic's Jeffrey Goldberg shared the group chat today, saying in a social media post people should see the texts in order to reach their own conclusions. A member of the Danish parliament from Greenland is speaking out against Vice President Vance's visit later this week. MP Aya Chemnitz.
I think it's been disrespectful, and in many ways I think the timing is wrong.
President Trump has said he wants the U.S. to control Greenland, although recent polls show that 85% of Greenland residents oppose the plan. Vance announced that he will join the vice president's wife, Usha, who was scheduled to visit Greenland Friday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Jess, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Jess, I mean, looking at the markets, I mean, the index, not a lot of movement. Red and green on the screen, not a lot of movement here. It doesn't seem to be anything driving this market narrative today. We had that, again, a nice bounce back off that bottom when we had a 10% correction.
Yeah, that's right. The bottom around March 13th in that span. So the S&P is about 6% off of that all-time high that we saw on February 19th. And the NASDAQ 100 no longer in a correction technically either, around 8.5% off its high that was on the same day of last month there. So it'll be interesting to see how things wrap up, especially going into quarter end, because Monday will be the last day of the quarter. There's also that JP Morgan collar trade that I know Tom Keene loves to talk about and how that can add some volatility there. But some CTA levels have been crossed. So, we might see some more buying because of that in other positioning measures.
Absolutely. So we'll keep an eye on that. But gold up a little bit here today. So we're $3,057 per ounce. What a move in gold. Dennis Gartman, the Gartman letter, calling that out. Long-term trade. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by Interactive Brokers. Trade over 10,000 U.S. stocks, ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. All right, we've got futures fluctuating, and this is with investors really on edge about the latest tariff headlines. S&P futures, they were little change this morning. This is after a 3-day advance. We go to Dow futures, up about 0.1%, 43 points. NASDAQ futures down 0.1% or 38 points. Copper trading at a record. Sources say U.S. tariffs on copper imports, that could be coming within weeks. And that's months earlier than expected, so that's why we're seeing that trading at a record. We go to the yield space, a 2-year yield, 4.0%. That's little change, and the yield on the 10-year, 4.34%. That's up 2 basis points. We have the Bloomberg Dollar Spot Index up about 0.1%. GameStop shares are up 10% after saying it plans to add Bitcoin as a Treasury reserve asset. Then we go to Dollar Tree. Those shares were advancing. Right now, they're up about 0.1%. They were negative. Now they turn back up about 0.1%. The whole thing behind it, it says it's nearing a sale of its Family Dollar business for $1 billion. And finally, shares of Chewy up 5%. Fourth quarter net sales topped estimates. Also want to get in Paychex, payroll and human resource company. Third quarter revenue matched estimates at shares down 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio. We are streaming live. That's video, I think, on the internet. YouTube. Okay, that's what the kids call it. Okay, head over to youtube.com, search Bloomberg Podcast Live, and that's where you will find us. Our next guest, listen to this, Jess. The next move the Federal Reserve will take may be a hike this fall. You don't see that every day, so that's where I want to start. Skyler Weinand joins us, CIO of Regan Capital Management, down at the Hedge Fund Hotel down in Dallas, Texas, the Crescent Court. Spent many a day there, got tons of II votes there, stayed at the hotel there. It's a good place to be. Skyler, talk to us about kind of how you're approaching the market these days. We've had that 10% pullback in the market, got people's attention. We've bounced off that a little bit. Where do you think we go from here?
Long term, up. For sure. You know, it's going to be volatile, but what we're seeing is that the consumer and corporations in the U.S. are still so strong. Corporate leverage levels are the lowest they've been in recorded history at about 20%. And consumer balance sheets are extremely strong in aggregate. You're looking at $160 trillion of net wealth in the United States. A lot of that has come from the stock market and real estate. And so, you know, that spending is going to come. But for right now, you know, people are a little bit nervous. Corporate activity, corporate M&A are in the same boat as consumers. But long term, you know, we kind of see this market running for at least the next 3 to 4 years based on how much dry powder is available for consumers and corporations.
So you're thinking a potential hike maybe in the fall. I mean, what would need to happen in order for that to occur?
It's already happening, right? So look at inflation. Look at what was really interesting about the recent Fed meeting a week ago was not only, you know, the presser and what they did, but if you look at the dot plot and if you look at their predictions, they make those predictions once a quarter of where GDP is going, where PCE is going, and where inflation's going. They're predicting PCE to actually, it moved up from December to March. And they're predicting that rates, you know, inflation's not going to fall below 2 for years, you know, 2+ years. They're predicting unemployment to actually fall. So unemployment's coming down, inflation's going up. Those are their two mandates, right? And so there is absolutely, no one can make any reasoning for me as to why they would hike in this environment, okay? Yes, financial conditions are restrictive. They're saying they're fairly restrictive right now. But if tariffs come to boot, and if that causes inflation, we're going to see another, you know, Paul Volcker type of moment where they're like, all right, we need to get this under control. We need to hike back up to, you know, 4.50 to 5%.
So given that backdrop here, we've gotten, I guess, a lot of noise that the markets have to deal with on a short-term basis with policy decisions coming out of Washington. Are we embracing risk in the equity markets? Are we embracing risk in the fixed income markets? Or are we kind of just holding back a little bit?
On the fixed income side, you still have to stay short. You know, the Fed cut last September, roughly 6 months ago. Fixed income has not done very well since then. The ag was up 1.25% last year. It's up about 2% so far this year. So the ag's done okay, but from September to today, it's down. Okay, so it's basically flat. So, and if you look at the shape of the curve, you're not getting paid. You know, you can sit there in cash at 4.30. You can buy agency government guaranteed mortgage bonds that are floating rate at 5.25. Okay, so you can get paid 5-handle yield to sit there, and the belly of the curve's inverted.
All right, stay with us. We're going to come right back to. We need to get these markets open for you, and we'll do that with Lisa Mateo coming up here. The futures, they're kind of not showing me anything here. I mean, I got the S&P off 3 points, but let's go to Lisa Mateo, and she will get this market open for us today.
You bet, and it's been interesting to see because we've had 3 straight days of gains on Wall Street. So let's kick things off with the S&P 500. Right now, little change. It's down about 4 points, 5,772. We go to the Dow, up 0.1%, 79 points, 42,665. And finally, the NASDAQ right now, down about 0.3%, 58 points, 18,214. The 2-year yield, 4.01%. That's little change, and the yield on the 10-year, 4.34%. Up 2 basis points. To commodities, copper trading at a record. Traders kind of pricing in the possibility of hefty import tariffs. We go to gold right now. We have COMEX sold $3,060 an ounce. We go to oil. Brent crude $73 a barrel. WTI crude $69 a barrel. The pound weakening on an unexpected slowdown. UK inflation right now it's down about 0.5% at 128.78 against a dollar. The Bloomberg Dollar Spot Index up about 0.1%. At the open, checking in with the Mag 7 right now. It looks like Tesla leading the loss is down about 2%. That is your Bloomberg opening bell report. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate it. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Skyler Weinand joins us. He's the CIO of Regan Capital Management. Started his career in Minneapolis at SIT Investment Associates. That is a great firm. It is an awesome firm in Minneapolis. I spent a ton of time in Minneapolis. There's a lot of money in
there are a lot of great money managers in Minneapolis.
And I hit them all back in the day and got paid by all of them. Skyler, thanks so much for joining us here. International. A lot of people are talking to me about international markets, and they've had such a good start, European markets in particular, this year. How do you guys think about the U.S. versus non-U.S. these days?
Well, part of that's due to the dollar. You know, the dollar's come down. If you look at Asia, for example, Asia's not done very well this year, but dollar adjusted it has. So that's part of it. But, you know, so that's helped out Europe a little bit. But, you know, Germany announces that they're going to turn the printers on and they're going to issue tons of debt. And going back to World War I, Germany is a very austere economy. Yep. And now all of a sudden, you know, based on the Ukraine war, all right, we're going to see a ton of debt printing. And so that's really ignited certain sectors, obviously like defense. So, yeah, it pays to be, you know, well diversified, both in terms of, you know, equities, but also in terms of locations as well.
How long does that story last for international, just because they underperformed so much relative to the last year, and especially the last 2 years of the bull market run and the S&P 500 because of what was going on with AI? And obviously these other corners were cheaper, but is this something more temporary that you think is going to happen more internationally?
For sure.
Or does it stick?
Yeah, so, you know, we're a couple months into the administration, 2.5 months, right? And they came out, you know, the administration came out and said, hey, look, we're going to break some things for the first 100 days. So what do we got? We're halfway there. We're halfway to 100 days, basically. So, you know, 3-4 months into it, we got a couple months to go before the spotlight comes back on the United States and volatility decreases. We're seeing that in the VIX. You know, VIX almost hit 16 handle yesterday. And so when that volatility subsides, I think the spotlight comes back onto the U.S. It comes back onto the big Mag 7, tech, AI, you name it.
30 seconds left. Earnings. What's your view on earnings? Can we depend upon earnings to drive this market?
No.
No.
So earnings will be there, but at a decreasing rate. Okay. So we've had a gangbuster 3 years, right? In, you know, 2.5 years. So earnings will be coming down on a year-over-year basis. We can't continue to produce just gangbuster year-over-year earnings. And so, yeah, you know, maybe the stock market ekes out 5-8% this year, but above and beyond that, seeing the 20+% that we saw the last few years, that's not going to happen.
Right. Very good. That's kind of what we've been hearing from a lot of folks, looking at an earnings growth rate or stock market return rate of kind of mid to high single digits as opposed to the 20-25% we've seen over the last couple of years. Skyler Weinand, thank you so much for joining us. Skyler Weinand, he's the CIO, Regan Capital Management. They're based down there in the Big D, Dallas, Texas, but he's joining us here live in our Bloomberg Interactive Broker Studio. We appreciate that. Again, Lisa Mateo did get the markets open for us. We appreciate that. S&P down 5, the Dow up 92, the NASDAQ down 74. So no.
Yeah, I always like to look at MOV for the S&P 500 when you use that function. So you can see NVIDIA right now is the biggest percent decliner in the S&P 500. So when you have a weighting about 6% in the index, obviously it's going to weigh on the market, and that's why you're not seeing the S&P do too much right now.
Yeah, absolutely. The S&P showing a little bit of a gain here, or decline down 6 points. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We got stocks struggling to find some direction. Kind of a mixed look this morning with tariff issues front and center. In another twist, U.S. tariffs on copper, well, could come much earlier than expected, and that has the metal trading at a record. So let's start with the NASDAQ. Down 0.2%, 46 points. The Dow up 0.4%, 183 points. And the S&P 500, little changed, up about 3 points. The two-year yield, 4.02%. That's little changed. And the yield on the 10-year, 4.35%. That's up 3 basis points. We have the Bloomberg Dollar Spot Index up about 0.1%. That tech rebound fizzing out just a bit. We have Tesla and chip stocks taking a hit. For example, Tesla down more than 1.5%. We have NVIDIA down 2%. Checking with two of our top stories, we have GameStop. It said it plans to start investing in Bitcoin. Its shares are up about 8.5%. And Dollar Tree selling its Family Dollar business to a private equity consortium for $1 billion. Its shares, right now, they're down about 0.3%. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube as well. The market does not like uncertainty, and we've got a lot of uncertainty out there right now, and that's kind of been one of the calling cards so far this year, trading in calendar year 2025. Let's see what the professionals are doing here. Regan Mitrione joins us. She's a partner at Callan Family Office. Regan, thanks for joining us here. How are you navigating what seems to be a kind of a choppy year? We do have the VIX back down to 17. That's a little bit reassuring, but it's certainly been kind of an up and down start to the year here. How are you guys navigating this?
Yeah, thanks for having me back. It's certainly been an interesting year after seeing, 2 huge up years and not a lot of volatility. I think everyone expected to see a little more this year, especially with a new administration coming in and making changes. I think there were more hopes that the focus would be more around the deregulation and tax cuts up front that would be more supportive of markets. And instead, we're getting a lot of the volatility driven by all the tariff discussion and the uncertainty you mentioned around what that's really going to look like. We should get a little more clarity next week, but just seeing a lot of movement in both directions. And so we've been, keeping our client portfolios very well diversified, rebalanced kind of at the end of last year, coming into this year, kind of looking at making sure that we have some broad-based exposures. And so far, we've been holding up pretty well as a result.
Since you have ultra high net worth clients, when you're talking about that repositioning, where more specifically have they made changes to their portfolios?
Yeah, so we do, own traditional equities and fixed income. We also do own a number of alternative asset classes. So a lot of the rebalancing I mentioned was specific to, large cap tech, reducing that growth area that had been run up so much. So we had really nice, healthy allocations there. It benefited our clients well, but we've pulled back some in that area and rebalanced into other areas. And within the equity portfolio, that does look at value, also to some degree smaller cap or international. But we do allocate a good bit in alternatives, and in private capital specifically, we're investing in private equity from early and late stage venture to buyouts to even some healthcare specific funds, as well as looking at opportunities in private credit. And we just started, we're just allocating now to a distressed real estate fund as well. And we do have some small hedge fund exposure too. Those are areas that tend to be a little less correlated with the broader markets and tend to help when we do have some of this volatility we've been seeing.
So in terms of alternatives, Ray, and that's interesting to me, what's kind of a reasonable allocation, do you think, to alternatives for kind of your typical client?
Obviously everything is very dependent on the individual situation and the ability, the willingness, the size of the portfolio, any cash needs. But a lot of our clients do typically have between 20 and 30% of their portfolio in what we consider alternative investments. And over time, we have seen that you do really get an illiquidity premium over the traditional markets. Even with equity markets as good as they've been over the last decade, our private equity portfolios have outperformed. So it's having that ability to have those assets that are less liquid, if you can, really can be additive to returns.
I'm curious about small caps because you brought up more of the smaller type space here. And even the Russell 2000, obviously a number of zombie companies in that index, but still down close to 6% year to date. When does that turn for the small cap type story? Because you'd think more domestically focused type companies might be more shielded to certain types of tariff related issues.
Exactly. And I think we saw some of that run up, in the fourth quarter, partially following the election on some of these benefits that may accrue to small cap companies, as well as on hopes that we'd see interest rates coming down, which would be very supportive for small cap companies. So it has been a slow start to the year. And we do focus more on the active space instead of investing in passive indexes when it comes to small cap. But I do think when deregulation and tax cuts come back into more front and center in the narrative, I think that will help small caps. That'll create a tailwind, as well as if we do start to see some more rate cuts later this year. And to your point, the small caps can be a little more insulated from the effects of tariffs. It really just depends, though, on if they need to import for part of their process, even though their business is more focused domestically. But there should be tailwinds, and we do think that we'll see those play out later this year.
Leanne, you're based down in West Palm Beach, right?
Correct.
Is South Florida still booming, or is it cooled off at any?
I don't think we're seeing the influx at the same rate we were seeing it over the last several years, but it is booming. We've seen a lot of businesses relocating, either creating, a second location here or moving their headquarters down here. Also the real estate, we've just seen a lot of people just relocating down here. So it has been a change over the last few years for sure.
Amazing. Yeah, just an amazing story. All right, Rayanne, thank you so much for joining us. Rayanne Mitrione, partner at Callan Family Office. They're down there in West Palm Beach, Florida, with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Jess, and John. The U.S. says Russia and Ukraine have reached a ceasefire deal in the Black Sea, but the Kremlin says it's conditioned on sanctions being lifted for banks and agricultural exporters. We get more from Bloomberg's Rosalind Matheson.
Really, in a way, what this is about reinstalling the Black Sea grain deal that was in place for a while. But even when that deal was scuppered by Russia, Ukraine has continued to send ships through the Black Sea with grain. So tangibly, it doesn't change a whole lot on the ground, or rather on the water in the Black Sea.
Bloomberg's Roz Matheson. The Atlantic released a nearly complete transcript of the signal text chain between top U.S. officials that inadvertently included its top editor after President Donald Trump and several of those officials sought to play down the severity of the leak. The magazine had withheld some details when it disclosed on Monday that its top editor, Jeffrey Goldberg, was added to a text group set up to discuss an impending U.S. strike on Houthi militants in Yemen. Goldberg recounted how he watched in real time as top officials, including Vice President J.D. Vance and Defense Secretary Pete Hegseth, debated the strike. There are concerns about the Trump administration's plans for Social Security. The administration has announced plans to cut 12% of the agency's workforce. Previous Social Security Administration Commissioner Martin O'Malley says the Trump administration's staffing cuts to the agency spelled trouble for the 73 million retired workers.
People in field offices who will hold the hands of widows who are grieving, who will be patient with the grandmother who's bringing in a child with a developmental disability. It's not like pulling up to McDonald's window.
A 2024 Inspector General report found less than 1% of payments were improper. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Jess.
All right, Michael Barr, thank you so much. We appreciate that. Jess, not a whole lot. I've got the Dow up a couple hundred points, but the Nasdaq's off 99. The S&P's kind of unchanged. I'm not sure what the market's looking for here for the next data point. We are going to get some economic data later this week, and then earnings start with J.P. Morgan in a couple
April
of weeks, and
11th.
that'll be the next one of the catalysts here.
I'm actually looking at the KBW Bank Index. So BKX is the ticker symbol on this. So a measure of those big banks rising for a 9th straight day. So that's its longest rally since 2006 here going on and looking at. And obviously that index has a measure of big banks as well as regional banks.
And that was part of the Trump trade initially. Before we got into the whole tariff discussion, there was a sense of just the banks should be an area that will benefit, if no other reason than lower regulatory oversight.
That's right.
And maybe loosening up some of the regulations on the banks, which would allow them to perhaps generate higher returns.
And it's interesting because a lot of that has unwinded, to your point, because if you look year to date, that index is still only up about 0.4%.
Yep. So we'll keep an eye on the banks. That's often in folks what they're buying today. If they haven't been buying in the Mag 7, they've been saying, hey, take a look at the financials. That's an area to look at. Another area has been gold. That's kind of unchanged here today, but it's at $3,020 an ounce for gold. It's had a heck of a move higher. Bitcoin, I'm calling that out because Tom Keene is not here. It's off 0.25%, 200 points, just under $88,000 per token. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
All right, Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Mar-a-Lago Accords. I need a definition. I don't feel like I have a full grasp on what that means, but our next guest does.
That's right.
So
she's going to break it down.
Me and hopefully our listeners and viewers as well. Tracy Alloway. She's a co-host of Odd Lots. I know you sat down with Jim Milstein, the chairman over at, where's he? Guggenheim, exactly. Talking about the Mar-a-Lago Accords, what's your view of what the president's trying to get done here? And what did Mr. Milstein think?
Yeah, okay, it's tough to describe this in less than a minute, but here goes. So the way I think about the Mar-a-Lago Accord, it's basically an attempt to resolve a lot of the tensions that are in Trump's economic policies. So for instance, he wants to reshore manufacturing, but he also wants to pay down the deficit. To reshore manufacturing, you need a weaker dollar. But to have people keep buying your debt and try to reduce the debt limit, you probably need a strong dollar. So his solution to all of this is basically a currency accord. So everyone agrees to a weaker dollar and they do a bunch of things to try to get to that. And then a debt restructuring. So foreign investors that are holding U.S. treasuries are encouraged, I'm doing the air quotes, to swap their existing U.S. treasuries into longer term century bonds potentially, and that would bring down the U.S. interest costs. That's it.
I like that. I got it now.
It's interesting, too, because you and Joe Weisenthal were talking about how the goal would essentially be to weaken the dollar without upsetting financial flows that finance our debt. When you were talking to Jim, and especially his experience being he was a lawyer, but then also he was part of doing a lot of sovereign debt restructuring in his past, how did he view that and the likelihood that that could come to fruition?
Yeah, that's important. So he was the Treasury's restructuring guy in the aftermath of the financial crisis. So he knows a lot about debt restructuring. And he points out there are a few problems with the idea of a Mar-a-Lago Accord. One of them, pretty big one, is that only 15% of U.S. debt is actually held by foreigners. So even if you got 100% of those foreigners to agree to a debt swap, it's like a drop in the ocean. It's not going to really move the needle. And then the second problem is the way debt restructurings work, you have to give investors carrots and sticks, right? And the carrots and sticks in this case are U.S. security provision via NATO and also tariffs. You know, if you don't agree to the debt swap, well, maybe we'll impose a bunch of tariffs on you. Problem is, Trump has jumped the gun on pretty much all of those things, right? He's already threatening to kind of pull out of Europe. I think there's a lot of lost trust between the US and Europe. He's already imposing tariffs, or at least talking about it. So the question is whether any of those incentives would actually work for foreign investors.
The Odd Lots podcast, wildly popular, which means you have a newsletter too.
Yes.
So what are we doing with the newsletter these days?
Yeah, let 1,000 newsletters bloom, huh? So the newsletter, okay, so I mentioned in the podcast with Jim Milstein that the U.S. is actually owed a bunch of money from the UK. And so one way Trump could perhaps bring down the deficit, find some extra money, you know, some extra cash, like under the couch cushions or whatever, is demanding payment from the UK. The UK borrowed about $4.7 billion during World War I. They never paid it back from the US.
Okay.
And everyone just kind of ignored it, right? The UK argued, well, it's basically wartime emergency aid, so we don't need to pay it back. And the US was like, you know what? The UK is a big ally. We're just going to, you know, not talk about this for a few decades. But now, you know, diplomatic relations between the US and the UK are kind of changing. So it raises the possibility of whether Trump might be interested in this. And one estimate, by the way, I said 4.7 billion, but if you add in accrued interest,
yes,
it's trillions,
yes.
right?
All right. Well, good luck with that, I guess. I don't know how you collect on that. Tracy Alloway, thank you so much. We appreciate that. Tracy Alloway, she's a co-host with Joe Weisenthal of the Odd Lots podcast, one of the best podcasts out there, widely popular. We appreciate getting a few minutes of Tracy's time. Jess Menton, thank you for sitting in for Tom Keene.
Always a pleasure.
Fantastic. Hopefully he's resting somewhere on the upper east side with a beverage in his hand. This is Bloomberg. Good morning.